That is basically what Satoshi found when he discovered Bitcoin. You can view it as an element without protons and neutrons. So this is an element without mass. The information about the element is the element, since it's a purely informational element.
Prices determine the value of money.
Nothing. But over time, then you have price discovery over time does mean something.
To the bank in cyberspace, you're the only one no central wanker can debase. In other words, scarce and true. In other words, Bitcoin, I love you. Fill my heart with sats, let me stack forevermore. You're the only asset that I dream of, I want more. In other words, hodl strong and hodl well. In other words, haha, never sell.
Bitcoin today. Not Bitcoin. This is Bitcoin today. Not Bitcoin today. This is Bitcoin. Bitcoin now. Turn up your speed. Turn up those AKs. Get that education going. This is Bitcoin. This is Bitcoin now.
It don't look now, but Bitcoin is on fire.
This thing is, you can't kill it. You have to find something that you can trust in a trustless world, which is Bitcoin. You know,
It is a asset class that protects you. Right. The U.S. federal government's on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path.
You do not sell your Bitcoin. Sell your Bitcoin. You do not sell your Bitcoin. Sell your Bitcoin.
this is Bitcoin today. Not Bitcoin. Not Bitcoin. Not Bitcoin today. Not Bitcoin. Not crypto today. All shitcoin. This is Bitcoin today. Bitcoin. Bitcoin. Bitcoin today. Bitcoin. Not shitcoin. No. Not Bitcoin today. Not close. Not Bitcoin today. All shitcoins, by the way. Just Bitcoin today.
You do not sell your Bitcoin. Sell your Bitcoin. You do not
Cosmo, did you sell any Bitcoin?
No,
sell your
sir.
Bitcoin.
Attaboy.
Never.
Never.
That's not something we do around here.
No, we try
Unless,
not to sell the Bitcoin
Unless you need another
unless
Zima.
the baby needs a new shoes. Alan's in here already. That's great. We were waiting for Puncher. Puncher kind of threw this together. We'll probably dive straight in off the deep end. Maybe we'll grab a Robert too. I'm sure he has some thoughts on yesterday. Alan, good morning to you, sir. The little mute button in the bottom left corner, as Terrence always says. Terrence is on his way to host the, it's going to be the MC up in Portland. He's just jumping on a plane right now. So while we're waiting for Alan, let's say good morning to AC. How are you, sir? There's Alan.
Good morning. Another beautiful Bitcoin day.
Awesome, huh?
And I'm here, guys.
There you are.
This is Alan.
Hey. I think we were in a chat group together, but I killed a bunch of them because they were driving me nuts. But kind of missed some of the things you used to say in that chat group. Maybe before we go diving into the deep end with Alan, we'll just touch base with Robert real quick and maybe get some sentiments from yesterday's gulag that not many of us really care that much about. But morning,
The
Robert.
FOMC meeting?
Yeah.
Yeah.
Oh, I heard the kitty.
Yeah, of course. Yeah, he was quite hawkish yesterday. I was expecting him to be hawkish. I've been kind of leaning that direction. But he was even more hawkish than I expected. And yeah, the market really kind of puked, dragging Bitcoin with it. And then, we had earnings and Microsoft and Meta that just absolutely reversed the entire puke. So Bitcoin got a bid. But yeah, no, I don't think he said anything that was really that critical. They're worried about inflation. They're worried about, they're starting to see cracks in the labor market. We finally had 2 dissenting votes from the committee. So this is the first time in like 30 something years that we've seen that. There's auditioning for Fed chair by Waller and I think it was Bowman. There's starting to be this kind of auditioning for the next Fed chair, trying to impress Trump. I think that Trump ends up going, I think this was probably his red line, and now he's going to go kind of full bore towards either firing Powell, which I think is less likely, or speeding up the nomination for the next Fed chair. Because really, when we talk about the Fed, the real power that they have is not setting that federal funds rate. The real power that they have is telling the market, here's the direction that we're going to be heading in over the next year or two, right? Here's what we're going to do with the balance sheet, QE versus QT, and the path of rates, right? Like the direction that rates are going. That's really their power. So I think, we could see Trump nominate very, very early, the next Fed chair, have that person go out and do what people like James Fishback are doing, and message to the market just mega, mega, mega dovish sort of rhetoric. That'll get pretty immediate effects, for them. I think that for the American people, unless you own Bitcoin, it could be quite bad. Turkey went fiscal dominance route, and it did not end up too well for them. We thought 8-9% inflation was bad, but they had 30, 40, 50% inflation, so an order of magnitude worse. And we're all protected here because we have Bitcoin, but I'm legitimately significantly worried about like the rest of America that doesn't, because I think they're making it abundantly clear they're going to run negative real rates at the short end, issue even more debt in bills, which is stimulative, and inflationary, due to the lower volatility in Treasury bills versus longer term, duration. So it's very pro liquidity. We have an offset with the refilling of the TGA. So yeah, but like the direction that they want to go clearly is this like fiscal dominance. We got to get the interest expense down. Got to run negative real rates. If you have Bitcoin, you're protected. You're okay. But like it's one of those things where I'm kind of starting to like worry about like the normal people I know that don't have Bitcoin, if that makes sense.
You're such a doomer, Robert. I'm just kidding. Too soon?
Well, I'm not saying.
I was just joking, buddy.
I
don't think that at all.
Just to make it, I always point out, but just again, I'm not calling for like 50% hyperinflation month over month. Like I don't think we're going to that place. I think it's much more likely we see, something in the range of say 5 to 15%, due to different dynamics with the dollar and the U.S. system and all sorts of things. I don't think it's going to like hyperinflation and this crazy cataclysmic thing.
Yeah. Hey, before we proceed with saying hi to everybody up here, hey, Alan, how much time do you have? I know I was just hoping to fill the room up a little bit, get Puncher and a couple others in here before we dive into the meat of your post from yesterday. How much time are you able to hang out with us today?
No, I sort of blocked out at least an hour of stuff, so
okay, cool.
Don't worry about being, under.
Sweet. So you don't mind if we just go through the rest of the folks up here and kind of
that's
say hi. All right, let's go to British. Hey, British, how are you?
Hey, I'm doing well. How are you? I'm excited for this earnings call. I hope you guys are as well.
Mitchell, good day.
Yeah, how's it going? I second what British said. It's kind of I don't look forward to too much in terms of content. I try to limit content consumption, but super pumped for the earnings this afternoon.
I think they must be talking about MicroStrategy. I don't know.
Strategies earnings, yeah. Today is
Oh
a
yeah, my bad. Can't even
earnings moment.
say the name right.
So what do you think?
And
What do
Matt
you think,
Mann,
British? Are they going to be a little more lenient on MicroStrategy than they were on Tesla? Do you think that they're going
it's
to make it the
strategy,
S&P?
buddy.
Oh,
Firstly,
forgive
it's
me.
strategy. Put
Forgive
some
me.
respect on their name, okay? Secondly, look, I mean, I don't know if you want to go through a stage, Lauren, and we can come back to it.
Yeah, just say hi to Matt real quick, because I know he just jumped in. What's up, Matt? Okay, he waved. All right, go ahead, British.
Yeah, look, strategy is dealing with an environment where NASDAQ, I mean, NVIDIA, for example, is trading at a 50 to 60 earnings per share multiple. Tesla's trading at 120 earnings per share multiple. And nobody knows what Strategy's earnings per share multiple is because they've never had any earnings. And for the first time in history, certainly also the first time in my lifetime, a company has put an asset on the balance sheet and is now about to get earnings based on that asset. I have never lived in an environment where a company has pivoted from being a software company to basically having real estate on its entire balance sheet and then been given earnings based on the appreciation solely of that real estate. That's
So,
what we're
British, you're
about to
saying
see.
this is the first call where the new rules actually apply?
Yeah, the first call where
Oh.
all of this actually comes to fruition. And more importantly, it's the first time where Wall Street, from today onwards, will be forced to analyze Bitcoin as an earnings vehicle like NVIDIA's chips, like Tesla's robot cars, like Microsoft's bad software, like Apple's, never changing products. Like they actually have to look at this and go, how much of an earnings engine is this? Because these are actually now earnings. And it's probably going to be the only time in my lifetime where a company is going to make this reframe for the first time. So I'm very excited for this new world that we're opening up and hopefully growing from today.
British, can you explain? I didn't follow it super closely, but like if my parents buy a house or well has they bought this house and it 4x's, uh, I don't personally, like I don't think of that as revenue or earnings. So can you
Sure.
describe, the
Yeah, sure.
how it's earning?
Neither did the stock market, right? Like the stock market didn't consider Bitcoin's price appreciation until the FASB rules were changed. And the FASB rules changing basically made it so that, yeah, a company holding an asset that goes up in value, like, or specifically digital assets like Bitcoin, is now considered earnings. And I think it kind of should be for a company, right? Maybe not for an individual, but an individual looks at it as capital gain, and a company will also look at it as capital gain, but it's now can be marked to the market quarter to quarter, which is extremely important. Um, Whether you philosophically believe that it should be or not, you might look at it and go, no, this is just devaluation of the US dollar. And that's a fair assumption to make. But these are now the rules that Wall Street is playing under. And this is the first time that we're going to see the impact of this.
Yeah, and that makes sense. It could also go the other way, right? If we get a bear market.
Yep.
Okay, gotcha.
Yep.
Hey, Robert,
100%.
I was going to come on and talk about a different thing when we get to it, but on this issue, I'm a recovering NASDAQ CEO. And ironically, what British is talking about and what we are diving into a bit, I actually, when I took my company public that still trades, we actually already had a bunch of Bitcoin on our balance sheet. So this was way before Saylor even pivoted, way before he started stacking in 2020. When I was running it privately, we raised 100 million. And because I had a lot of relationships in this community, a lot of people wanted to invest in our private offering where they were interested in giving Bitcoin or Ethereum or US dollars via wire, that kind of thing. And so we started accepting it, stacking it on our balance sheet. And then when we were going through our registration statement with the SEC, the only thing that sucks working with the SEC once is to work with two groups within the SEC. And we actually got to be the guinea pig at the time for the first ever blockchain and cryptocurrency group within the SEC that had to review our registration statement and our balance sheet in parallel, because our first response came back as, what's this Bitcoin stuff on your balance sheet? We held Bitcoin, we converted the Ethereum to Bitcoin and held it. And we had to go through 8 months back and forth with the SEC. And the accounting office at the SEC, much like British alluded to, they literally asked me and our CFO, like, how should we handle the accounting for this as a public company? Because we contacted them and said, hey, FASB has no rules. There's no GAAP rules for this. Like, we think you should be marking it to market. For those who don't know, the original approach that they took was horrific because they hated Bitcoin and didn't want to see digital assets on our soon-to-be public company or any other public company. So what they did is they said, okay, let's say you bought Bitcoin at $50,000, and then the lowest price it ever traded at after that, let's say it goes all the way down to like 15,000. They forced you to take a real loss on your earnings per share immediately at the end of that quarter on the drop from 50,000 to 15,000. So you're showing a one-time loss of $35,000. Now, if it snaps back and now you're at 100,000 and your original investment doubled from 50 to 100, it didn't matter because you still weren't allowed to recognize that gain, where now it went from 15,000 up to 100. And you only could do that when you sold the asset. So effectively it was, I'm going to let you buy or hold. I'm going to punish you to the lowest number that Bitcoin ever trades at after you possess it. You're going to write it off as a real earnings per share hit. And then afterwards, even if it accelerates and goes to 1 million, doesn't matter. We're going to show it at that ridiculously low value. And only if you sell it can you mark that market gain. That took years of battling. We finally went through, we took those rules, we set up $100 million ATM, and we started selling stock to buy Bitcoin and stacked it. It was an early state where we were one of like 5 people doing it. But this is a huge deal today because now that the FASB pieces, all the earnings per share estimates are ridiculous. They're all negative, like 10 cents, 11 cents.
Negative 10 cents is crazy.
Yeah. And we know that they're sitting on tens of billions of gains, and it's going to be like $30, $40. I didn't calculate the exact number, but this isn't anything new. Like if you're Warren Buffett and you're Berkshire Hathaway, every single quarter they've reported in its history, they just mark all of their investments to market. It's nothing magical about this, but when Warren Buffett did it with Berkshire Hathaway, it was all good. But now when it's anyone else, it was bad. So I'm excited that it's going to finally start happening and reality can strike. And this will be at least reflective and consistent with what everyone else in the world has to do with any of their investment. Every other public company has to mark to market their equity positions or even private company positions. It's only Bitcoin that got this crappy, shitty treatment.
Does this apply to real estate as well? If a corporation owns real estate and that appreciates, or is it just Bitcoin and digital assets?
There's a yes and a no. So if you remember when Eddie Lampert basically took control of Kmart and then raped, pillaged, and plundered the balance sheet, that was because they were marking all the real estate at book value in like 1950 or 1960 terms on all of that real estate that Kmart owned. So the whole play was basically like, look at this screw up in the accounting. These idiots are marking their balance sheet at 1950 or 1960s real estate values. I'm going to go in, take control as a creditor in Kmart, and then I'm basically going to remark everything to market on the actual value of the real estate. So yeah, it's been a game that's been going on, whereas corporations used to say, I'm being conservative, so I'm going to keep my private company investments marked at my cost. I'm going to keep real estate at book. And then radically everything changed when those balance sheets were used against them.
This is extremely monumental. Like everyone, if you want to make a light of it, You have no idea how important this is. This moment right here, when the market freely determines what should be an EPS bump based on Bitcoin on the balance sheet, will cause a downstream effect to other companies that want to get the same EPS bump into like figuring out their financial team will be able to figure out like, if we add Bitcoin, we can add this much valuation to the business. This is a monumental day for Bitcoin from a corporate treasury adoption perspective.
I think it's interesting too, British, to talk about this in the context of what previous earnings per shares have been. If you look at Q3 2024, it was like negative 870,
Yep.
Q4 negative 5.6, Q1 of 2025 negative 2.7. So even if they got to just zero, right? Like you're
Right.
still
Right.
trending in the right direction. And as Bitcoin price has continued to go up, it's just you add the accounting changes on top of it. I think it definitely puts it into context for me, like why this is so important.
Well, go further, right? Because now, if the EPS is valued like this, now every analyst in every hedge fund has to sit there and analyze the potential for a strategic Bitcoin reserve, a halving, anything that could impact the price of Bitcoin now has to be actually modeled by every analyst to figure out what the potential future EPS should be on MSTR. And now Bitcoin gets injected into every hedge fund at force. You
by the
guys
way, they're not
really not
they're-
fucking bullish enough. I don't
yeah,
understand what's going on here. You guys not bullish enough at all.
Who was that, Matt Man? No.
yes,
Oh,
sir.
there's two Matts up here. Hey, Matt.
Hello, hello.
How are
Yeah,
you?
I'm excited. I'm not a big MSTR person. I'm an underlying person, but I understand that MSTR is an important piece of surface area to expose a lot of this TradFi capital, this hedge fund capital, this PE capital. There's a lot of money out there that's confined by prospectuses, and they can't go outside that prospectus. And to British's point, the reaction to the market from this FASB markup, and then suddenly seeing that there's a there. Hedge fund people are not, they're hardworking, but they're not very creative. And once they see a money making opportunity, they're just going to pile
Right.
into it. And if you see active investing absolutely dying and everyone's becoming passive and there's just zombies in the market going up and up and up, the same thing's happening in PE. No one's thinking, everyone's moving with the herd. And once the herd realizes Bitcoin is accretive, look out.
Do you remember when everyone said Wall Street people are smart? Wall Street people understand that this Bitcoin is absolutely earnings. Wall Street people have already priced MSTR. Well, clearly they fucking haven't, because you can see that their expected EPS today is negative 10 cents. They're not smart. They follow the rules and they stick to the rules because they're too afraid of breaking the law. Unfortunately, Wall Street has been bureaucratized to the nth degree. Some people agree with that, some people won't, whatever. The point is, today, all of their models have to change in order to figure out Bitcoin and how Bitcoin companies should be valued. And MSTR has been through this war that they're now going to start seeing the benefits of.
British,
Dark's up here. Mitch, go ahead, buddy.
British, are you picking up short dated call options going into this earnings?
I don't do short dated trading at all. Every time I do it, I lose money. So I guess I should, though. Maybe I'll throw in a few grand.
Fred, what are your thoughts on all this stuff? Are you able to weigh in on this at all?
Yeah. So listen, I don't want to be the contrarian here, but look, I think this is going to have a bad ending. These Bitcoin treasury companies, and I kind of
Are you lumping MSTR in with that? Just clarifying.
Yeah, I am. And why I say that is I'm not predicting that they're going to go significantly below 1 in terms of MNAV, but I do think we are going to see a compression of all these MNAVs down to 1. And I think that, I think we're going to have people are going to have a bad taste in their mouth, right? So look at Bitcane's report on this. It's very comprehensive. I don't want to repeat it, but here's the thing I would say on these earnings. I view it as negative. Look, I think MSTR is a tax inefficient structure. I understand why it exists. I understand that many people can't buy iBit. I understand the Bitcoin yield, all that stuff. I understand all that, but it's a tax inefficient way of holding Bitcoin. And I think we're about to see it when you get the 15% AMT kicker that's about to hit MSTR in the ass, right? Because that's, they have, I think it's about an $18 billion unrealized gain that's going to be subject to the 15% AMT, corporate AMT rate. And they're going to have to pay that. And I think people are going to realize, okay, we have these earnings, but they're unrealized. And we're going to have to now raise more money just to pay the tax that's due on these earnings. So I think it's not a good structure.
Minus the tax loss carry forwards. I mean, you'll get a certain period they've lost money.
Yeah,
for so
right.
long. They're going to have a big.
You are correct. You are correct. And look, and it only applies evidently if you have over $1 billion over 3 years. So you probably didn't see it, Alan, but MSTR is gonna see it, right? They're gonna get taxed, and I know British is just constantly hitting that laugh button.
I think you should stick to your day job for these shit coins and tell us about whatever pumped up fun bullshit there is out there in the market.
Okay, listen, there's a reason why I'm cautious with having you on a space. And look, first of all, I have over 10 times as much Bitcoin as you personally, 100%.
I don't think I've ever told you how much Bitcoin I have.
You don't need to. You don't need to. I can just, I just know it. Okay. So
you must be in France right now. The elitism, the European elitism is oozing from you.
Well, it is, but listen, I happen to have, made $500 million in exits.
Everyone kind of knows when you've made $500 million from 75 different exits, what that means.
You do not know what you're talking about, British. You're not qualified. So
everyone also knows when you resort to you're not qualified in an argument what that means.
British, just chill out a little bit, buddy.
Listen, I started speaking, I started giving you my take on MSTR, and you start bringing up Freddie shitcoins. Okay, that it's sort of like I'll do my own space. I'll bring in people like Thomas and people who aren't going to respond this way. But part of your problem, British, is that you resort to calling people morons every 5 seconds, and it's just oh, there you go, you dropped out. But anyways, look, I'm not trying to attack British here, but I do think we are in a bubble in terms of Bitcoin treasury companies. I do think, that's the Bitcoin report is very good. It said basically, is Bitcoin in a bubble? No. But is Bitcoin treasuries in a bubble? Probably. So I do think Bitcoin treasury companies, that bubble is going to pierce. And I think that it's going to pop. And I don't know when it's going to pop, but I would guarantee you that it'll pop at the next bear market of Bitcoin. And I do think we're going to hit another bear market of Bitcoin. I think we all have to be mentally prepared for that. I actually don't think you should sell all your Bitcoin during that bear market. I think you should hodl through that bear market. We don't know how bad it's going to be. It might be 35%. It might be 70%. We don't know. I don't claim to be able to trade through that market. I don't think you can hedge your way through that market. I do think Bitcoin's going to 1 million, but as I sort of said in a post today, I said, not everybody's going to survive this thing. And so, if the guy next to you dies, pick up his rifle and continue the fight. So that's kind of my view is, look, we're going to get there. We're going to get to a Bitcoin 1 million. I do think that there was a bit of a bubble happening in these Bitcoin treasury companies. I don't think it's critical. I don't think it poses a systemic risk to anything. But I do think it's a little bit of a bubble. So I'm not as bullish as our dearly departed British HODL is.
Yeah, I think these spaces denigrate when we resort to name calling. There's really no value in it for anybody, and I'm not a fan. And if it's my space, I will not stand for it for sure. So if there's other hosts that are hosting Bitcoin today and it gets a little heated, I just step back because it's their
I'd like to
space and
bring
let
up
them
a
take
few
the
other
reins.
points.
But yeah, I really don't think there's a lot of
There's
value
another
in
thing I
just name
think
calling. So
that basically Larry Lepard pointed out today, and I don't know if you guys have covered it already, but there's a really good video by an economist named Werner out, and Luke Groman retweeted it, and I retweeted it, and Larry Lepard retweeted it, and it's a great video. It's with Tucker Carlson, and it's Richard Werner on Tucker Carlson. You should absolutely watch this video. It's 2 hours long. It's really how banks banks create money, and how the central bank and especially the ECB is basically crippled German innovation after the Japanese banking system basically blew up the Japanese system with funding Japanese real estate loans. So I'd love to talk about that if anybody's interested, but we can also talk about anything else.
yeah, we're going to talk about the first post in the nest. Alan posted that yesterday, and it got quite a few, like 22,000 views or something. So I know we got Alan for about an hour, but we can take that path, or we can go to your subject real quick, Fred. And then I was hoping Puncher was kind of the guy that was getting Alan on here, so I was hoping he would jump in the space. But we can take that, path for a minute and then jump into Alan's post after that. Go ahead, Fred. Thomas has his hand up. Do you want to start with Thomas, and then we'll kick it back to Fred?
I was about to say, Darkside had his hand up first, and then.
Oh shoot! Sorry, I have not. I can't see hands. I didn't do any scrolling.
Yeah,
Go
you're
ahead,
good.
Matt.
I've been watching them, so we'll go to Dark and then Thomas after that.
Hey guys.
Morning, buddy. How are you?
Morning. I've been traveling, so I had to hop on
Fucking
late
doomer.
because of reception issues. But yeah, real Fred, thanks for bringing it up. This Richard Werner piece has the potential to be our Minsky moment. Um, yeah, everybody in the space needs to watch it. I can't throw. I'm driving, so I don't want to throw it up in the nest. But if someone could throw it up in the nest, let me give a real quick TLDR on what we got here. Werner's a groundbreaking economist that sort of breaks down the entire Ponzi scheme scam. He calls it a Ponzi, so I will too, of banking and credit creation. And real quick, he breaks down. Uh, first, he walks through proving that banks create money, and that a banking license is a license to create money, which is unlike any other business in the world. They actually can create their own assets and then monetize those assets in the form of money. But more importantly, he walks through the three types of credit creation and what banks do when they print money. One is they loan that money for asset purchases, right? So if you're buying real estate or you're buying financial products, right? Those purchases do not add to GDP. They just serve to inflate the price of assets. And I think to the stat he gave, 85% of European, and he's European, 85% of European loans are used to purchase assets. The second type of lending,
especially British, Darkside, he said.
Yes, yeah. The second type of loan creation that he talked about was consumer loan creation, and he sort of proves that that's really counterproductive, because when you make consumer loans, you just create inflation, right? It does not add to the supply, the goods and supplies in society. It just serves to raise prices. And then he goes on and gets into his third type, which he says is extremely is credit creation for the purpose of advancing entrepreneurs, right? The creation of new technologies, the creation of all of the different things entrepreneurs create, business creation, small business creation, which then serves to increase productivity and is extremely productive for society. It's an amazing walk through modern banking. I won't get into the entire central banking thing. It gets extremely complicated, but Tucker does such an incredible job of boiling this down so that anybody can understand it. But I think even more importantly than what he said is this the Minsky moment? Will this video go viral enough so that people just put their hands on top of their heads and say enough?
Dark
And
side.
Fred, just yeah, real quick. Let me just bring this back real quick. Let's bring this back to MicroStrategy for a sec, right? Because I was thinking about what you were saying, Fred, and in so many ways I agree with you. Obviously, there's, you know, I can make such. I mean, everything in my intelligence tells me these things should trade back to one. That this arbitrage can't go on forever. There's a lot of reasons why I can make good arguments why treasury companies are too rich. But at the same time, right, when you understand that 85% of loans are going to asset purchases, then you got to land in a different area, right? And when you understand how banks are creating money out of thin air, right? And by the way, way more money than governments are creating, right? Like the banks are the most important, and Werner does an incredible job of walking through this. It's not even close, right? The banks are creating the money, they are printing the money. When you understand that, then you have to step back and say, wait a minute, like you will hit escape velocity on money creation. And since we've gotten to a point where it doesn't seem there's a willingness to have a recession, right? There's just a willingness to print more money and bail out those banks, then maybe these things don't come back so quickly and so easily, right? Like again, the bigger question here is this our Minsky moment? Is this the moment when even the basic common folk that have no understanding of economics listen to this
It was one
and
hell of
say,
a video, Dark Side. One hell of a video.
yeah, and I'll say this, mind blowing, right? And I've understood this so deeply since I was young, but never have I seen it put together in a 2.5 hour piece so that I could like get my mind wrapped around it completely. Uh, Absolutely mind blowing. Please watch the video. It's going to change everything. It's going to change your mind completely. So I'll just land the plane there.
It's up in the nest for anyone who's curious. We all posted it up there at the same time, so I cleaned it up a little bit, and it's the third one up there. So, yeah, we got some hands. Let's go to Thomas and then Simon.
Yeah, I look forward to watching the video. I like the Tucker series in general. They do these deep dives with very interesting people, so I'm going to definitely watch that video. But I jumped up. I wanted to comment on these treasury companies. We sit here today and we say, we see the strategy and all these other copycats jumping in and putting big corporate stacks together. And obviously, strategies isn't a class by itself. It'll be interesting to see what 21 Capital does with all their money. But to me, you got this AMT sitting out there, it's unclear to me that the future is going to remain unchanged. They could change the tax treatment for this, but more importantly, there's going to be an evolution of products that are going to leverage Bitcoin holdings above and beyond simply holding it on your balance sheet. So we as individuals, we hold the Bitcoin, and we're saying, okay, as it grows, my balance sheet grows. But the issue is going to be, are there going to be products that leverage a position? And then when that happens, the issue will be, does a bigger stack matter? Does the fact that strategy has almost 700,000 compared to somebody else, let's say 21 Capital ends with 100,000 at the end of the year, does that differential matter? I'm not sure that it does, but I allow for the possibility that it does, in which case an MNAV above 1 will matter. If there is no value to the stack other than the appreciation, MNAV equals 1 or less if it's trapped, just like GBTC was trapped. So that's the thing we should be paying attention to. People are speculating a high MNAV because they think it's going to mean something, but until we see it does, I think you're going to see a MNAV erosion or decay closer to 1. But I do allow for I do think there's going to be interesting things. And the one thing I'll just stop after I say this. The interesting product to me is the one that Grant Cardone is doing with Cardone Capital, where he's marrying Bitcoin capitalization to real estate. And he started off in Melbourne. I think, Dark, you were one of the investors in that first phase, but it was an 85-15 split, 85 cash, 15 Bitcoin. His new projects, he's got a half dozen or 10 projects. The new ones are a third, a third, a third, a third debt, a third Bitcoin, a third cash. And what's going to happen over time is his real estate projects that have um, a an, a Bitcoin topping, say like, or a Bitcoin side action, are going to flip, and he's going to have Bitcoin projects with a side action of real estate. And then you take that model to other industries, and I think you can change investment banking and a whole bunch of things. In that case, size does matter, because your ability to then scale that model will have to do with how much Bitcoin you have to capitalize different projects. So I would just, right now people are betting on an MNAV, but we need to see concrete projects like grants at scale that sustain an MNAV above 1 for any period of time, in my opinion.
I think it's a good point. Like, one of the things that we talked about in the past, it's been a while, but was basically Bitcoin can empower productivity. And if you don't have some sort of productivity tied to the Bitcoin, and it's just a big stack of Bitcoin, then it should be worth the big stack of Bitcoin, whatever that's worth, right? And if it's a project that holds Bitcoin, then you're really more valuing project plus Bitcoin. But the more leverage you get, the more, to me, it just starts to look like, basically, I understand the structure is different, but it's very analogous to Celsius, BlockFi, FTX, all of those, which at the end of the day were just over leveraged on the amount of Bitcoin they supposedly had, and they weren't providing enough value to make up the difference. So
Matt, I think
that's
in Grant's project, the issue of concern he has as the project manager is the financing side and the certainty of the refi on the projects. Now, where I see this potentially evolving is highly sophisticated collateral loans that run under let's say they run under the treasury rates. Now all of a sudden you have smoking financing options, and it can change investment banking. So he's going to be able to refi his projects using a collateral loan. And when you invest in a real estate project with the Bitcoin, let's say this third, a third, a third mix, you're going to get real estate accretion, meaning that the 1,000-unit project you bought, all of a sudden in 5 years you now are co-owner in 3,000 units, and you have a lot of Bitcoin. So that wheel effect is possible if we can get collateral loans at scale, institutionalized, below the standard cost of borrowing.
Do you think even at the standard cost of borrowing, it would make sense? And then, sorry, Darkside, before you go, I would just let Thomas respond to that, and then we do have a couple of hands
Yeah,
up we should get over to.
Right now, there's a slight premium to the collateralized loans. I just think it's because the market's immature. So I do think if it comes down to parity with the cost of borrowing, I think that's even a good thing, because there's some certainty. The issue is the people lending capital, and in this case, it's going to be banks, right? If they're able to go to and get capital to loan, why wouldn't they take that spread? So if a bank is able to create money, through their money creation mechanism, and their cost of creation is, pick a number, 200 basis points, there's going to be competition to do collateral loans against Bitcoin that have very low LTV, because of the ability to foreclose is a smart contract. It's easy. There's no friction. So now all of a sudden, it's not going to be 500 basis point spread between the cost of capital and the cost of lending. You're going to see that compressed down to 100, 150 basis points or less. And then you start to compete with treasuries, or you say, wait a second, I can borrow a collateral loan lower than the cost of a treasury. I think that's possible. And that is where the treasury companies really come into play. I think the scenario that's probably more likely, but this is this issue of um, these companies. They're all a lot of these pretenders. None of these. It's really only going to be two. It's going to be 21 Capital and Strategy. The other ones are going to be pretenders, and they're going to be future acquisitions. And people are going to buy the businesses that try to do this, buy their Bitcoin, and then dispose of the operating company.
Hey, Matt, can I just make a quick point real quick?
Please.
Yeah, sure.
Yeah, just to that point about does the size of the stack matter? Let me just really quick address it. When you look at what Strategy's doing with these perpetual preferreds, right? The reason why they're able to raise this money in huge size is because they're over collateralized with the Bitcoin they hold, right? They have so much Bitcoin, $70 billion. They issued $2.5 billion worth of a debt type product. They're massively over collateralized. So in that case, the size of the stack really, really does matter. And then the final point I just want to make is that very often we're valuing these things based on the price of Bitcoin today. And I think you have to take into account what would it cost to buy that stack today or over the course of the next 3 months. And as that stack gets bigger and bigger, like in the case of Strategy, the replacement cost of buying that stack today would probably be Bitcoin, north of 200,000. So I just wanted to make those two quick points. Sorry for jumping in.
It's
No, you're good.
replacement cost accounting, right? So it's not the value of the assets at the current spot; it's the replacement cost.
That makes sense. Loren, I know we've got a bunch of hands up, but I also wanted to be mindful of Alan's time. Did we want to run through hands really quick,
Yeah.
or did you want to go back over to that conversation? Because I do think it's interesting, and
We
I want to make
better.
sure we touch
I
on
think
it.
that's probably what Puncher is getting at, because Punch, is that what you wanted to skip straight to that? Sorry, Fred. I know we were going to take that other path. Maybe we can do that after we're finished with this.
Yeah, and then Simon, I know you got your hand up too, so we can get to you as well after that. But go ahead, Puncher.
Sorry, guys. Alan Natowski wanted to talk about the frustration with the Bitcoin Strategic Reserve. We were promised a lot of things; they haven't happened. And he put forth kind of a thesis and it looks like a lawsuit. If you guys don't mind, can we give Alan the floor for a little bit just to run through that, and then maybe circle back to where we are now, because it is extremely interesting.
For sure. Yeah. His post from yesterday is the first one in the nest as well. So, Alan, if you would, I know you did speak earlier and gave a little bit of a background about yourself, but if you want to fill in any holes that you might have missed during that, the floor is yours.
Yeah, thanks, guys. So this one will probably be kind of an interesting thing. So I did find a means to intersect being a serial tech entrepreneur who, had the good fortune of building some companies and selling them to people like Cisco Systems and Level 3. And then the last one we created, my co-founder and I decided, we're going zero to either NASDAQ or the New York Stock Exchange. So help us God. So I ran that company for about 14 years, 10 privately. We raised, still a lot of money, but modest by private company standards. It was about 100 million. Then we raised probably 350 million while public. And, all these worlds of mine started intersecting between Bitcoin, tech, enterprise software. And then through that process, I started doing some recruitment to try to add some independent board members. And one of the people I got introduced to by, of all people, John Najarian of CNBC fame and all the great option work he and his brother do. I met somebody from South Florida, started recruiting him. I ended up transitioning out of my CEO day job and decided that he and I would stay in touch. He didn't join the board largely because I was leaving. But the long story short is through some common relationships, myself, a gentleman named Ken Noble, whose name's on the recent lawsuits that we did, and my other business partner, who has recently been confirmed as an undersecretary for one of the largest parts of the U.S. government for with Trump and others. He had brought me in to take a look at this deal and to dive in, because it's almost like you got to get past the Nigerian prince part of, how many people are claiming they have $250 billion of assets and they could go solve this problem relative to, the U.S. government and all these ambitious goals. And for anyone who went to the Bitcoin conference, of course, what did you do? You sat in the audience listening to Cameron and Tyler talk with David Sachs about all these initiatives and how they were trying to fund the U.S. Strategic Bitcoin Reserve. You heard Bo Hines from the White House, Tyler Williams from Treasury say the same thing. Senator Lumen said the same thing. The repeated theme over and over and over again was, where's the money going to come from? Of course, everyone would highlight there was an executive order signed by Trump, and if it was budget neutral, both Commerce and Treasury could immediately start acquiring Bitcoin for the strategic reserve and supplement it with whatever else was confiscated or seized in the world of the FBI and the IRS and people like that. So long story short, as I looked at this deal, because I think my business partner knew he was going to get nominated for this position in the government, which he did and successfully got confirmed. But he brought me in to look at this deal, and it was the most unusual, fascinating deal because it intersects every bit of history all of us talk about. So if you bear with me for 2 seconds on some history, obviously 1913 was an interesting year. After the Titanic sinks and the big plans of Jekyll Isle, we end up with the Fed, we end up with the IRS, we end up with the Anti-Defamation League, we end up with the Rockefeller Foundation, and a lot of interesting things happen. Well, I ended up diving into the middle of their central banks, and then there's the governments who are issuing sovereign debt. Turns out there's only 2 countries on earth that really haven't repaid their sovereign debt. One happens to be Russia, and obviously the Russia-Ukraine conflict is a big deal. And then separately is China. So it turns out that on the Chinese side, there was about 7 sets of bonds they issued to the United States investment community through Wall Street, directly back from JP Morgan himself. These started 5 sets of bonds from 1898 to 1913 were issued by China in British pound sterling, so not US dollars. All those in British pound sterling, call it 4.5%, 5% interest rates. Lots of them had, basic principal and interest coupons, the same way US treasuries would have and other sovereign debt around the world. But a lot of them back then also had unique inflation protection, where they would index it to the purity, the weight, and the value of gold, but in 1898 terms or 1913 terms, and so forth. So over time, as you might imagine, these stacks of assets that were bought and placed into bank vaults sat for decades and now more than a century. And the unique thing about sovereign debt, if you'll excuse the analogy, it's a little like herpes because it never goes away. So China had these 5 sets of bonds, and they did legally what's called repudiating the debt, which basically just means go fuck yourself. We're not going to pay you back, even though we're obligated to pay you back. So China did this with these 5 sets of bonds on British pound sterling, probably on a face value of a little more than 555,000 pounds. They also in 1919 and 1937 issued US specific dollar denominated debt, 1 batch in Chicago, 1 batch in New York. Sometimes they would have gold provisions, sometimes they wouldn't. And then Russia, though, is the more interesting part because in 1916, the Russian Tsar and his family sold debt, about $50 million worth of debt to the United States, again, from JP Morgan himself and others on Wall Street. And then they also issued these same bonds identically to the United Kingdom and to France. So along the way, through all these decades, in the late 80s and 90s, the UK and France decided to tell Russia, hey, you're either going to pay off these bonds or you're going to get no access to our capital markets. None of your businesses can list on our exchanges, and we're shutting you out of all capital market activities in our countries. So Russia ended up resolving those and paying off the bonds. Interestingly, though, these bonds that we actually control from 1916, Russia has never addressed with the United States. So lo and behold, for those of you who don't know the history on this, 1918, the Bolsheviks took control of Russia. The Russian Tsar and his family were murdered because they were not provided asylum by the British monarchy to release to London. And these bonds just sat and sat and sat. And they've been brought up over time repeatedly, and they've never quite been addressed. So as fate would have it, we actually have a pile of these bonds. And if you take the principal interest and the gold provisions back in 1916 dollars, when it was $20 an ounce of gold, you now have $226 billion and counting. What was interesting about the bonds is that you could be paid in rubles or in dollars. What's also interesting when you think about gold is that in 1933, Franklin Delano Roosevelt pushed through us getting off the gold standard for the first time, and we got away from hard sound money, which is why we're all Bitcoiners, of course. So this process goes on. In 1971, Nixon takes us off completely from the partial gold standard, and these bonds just sit and sit and sit. So what we tried to do is the owners of these bonds was to go say, you know what? I have an idea that sounds very Trumpian. We have non-US taxpayer money. Nobody wants to pay for the Russia-Ukraine conflict. Nobody wants to pay to fund the defense of the European Union and NATO. Nobody wants the ongoing war in Israel and Gaza. Nobody likes the security situation and the illegal immigration in the United States. So we said, hey, what if we can give you $250 billion of non-US taxpayer money? And hey, government, we'll do a deal with you, and we'll just do a simple thing. We'll make it a split. We'll take a 2% fee. We'll give you 98% of the value. You would look at it and say, okay, there's a 2% fee. I'd say sure, but we'd say it's a 98% gift. And now you could have Trump stand up and say, we're going to go solve Russia, Ukraine, solve Gaza and Israel. We're going to build a border wall, and Putin's going to pay for it. Sounds like a very Trumpian thing to say. So we actually have spent a lot of time and effort working through the opportunities that were available. And as the US crypto efforts kicked underway, suddenly there was a direct intersection with this community and the greater part of the world, because many of us are in Bitcoiners. We do want to change the world. We want to starve the central banks. And I found it very ironic that I could get in a position to sit on $250 billion worth of Russian and Chinese debt that has been unpaid. And it doesn't quite seem right that you're going to take US investor money, not pay your bills, and expect to be a superpower. So what we did to facilitate this process is we did file some lawsuits recently, a set of them on China. We bundled the 5 British pounds sterling, and that's being addressed in Washington, D.C. The 1919 and 1937 bonds of China, we filed actions in New York and Chicago, respectively. And then we did another action much recently with Russia on the 1916 bonds. And it's important for you to understand that everyone knows there's probably $500 billion worth of Russian assets that have been frozen because of the invasion of Ukraine. Well, where are those assets? And what are those assets? Well, there's 300 billion that's in Brussels at the European Central Bank. There's another 100 billion that sits in the city of London at the Bank of England. The US probably has about $10 billion at the Fed, with some other sprinklings in Japan and Australia. But basically, there's some things that, we have something called the Repo Act, which Congress put in place to say we could just go seize, $5 billion of Russian assets. You've seen the EU, which is broke on both energy and defense, say we're going to take the interest on all these assets that are sitting in the European Central Bank and elsewhere to fund their needs. And what we kind of did is said, this is all kind of cute and interesting, but why don't we make this a lot easier? Because anyone seizing assets under the guise of war, or going through a process where you're going to claim reparations for colonial activities or any other activities, none of the G7 want to touch reparations or seizures, because then they will be subject to reparations and seizures. We have the only legal means that we can find on earth with $250 billion to do a legal set-off. So think of a big journal of accounts at the money printer in central banks. And when we have countries buy oil or wheat or anything else between each other, they settle these international accounts. Well, as everyone knows, sovereign debt is a bearer instrument, just like Bitcoin, but just like US treasuries. And you could take your kids' US savings bonds, walk into a Chase bank, They'll tabulate principal and interest, and they'll deposit the money in your account. So what I tried to do when I realized all these things were going on at once was to say, hey, Mr. Bo Hines, Tyler Williams, Dan Katz, Chief of Staff at Treasury, representatives and senators, plus, Donald Trump and his staff, here's the easy solution. We will just simply make a deal with you. We'll hand you massive amounts of money. And then you can use these for geopolitical purposes. You can use them to resolve issues. And whether it's a carrot or a stick, I don't need to play geopolitics, but this is very similar to what you saw Elliott Management do with Argentina recently when Milei came on board, and they tried not to pay some of their debt. And as always, successor government doctrine dictates. So even trolling, when you see Trump troll Canada as the 51st state, he's not just making something up. We inherited the debts after the Civil War and the assets of the South. And one of the things in the Articles of Confederacy talks about Canada being a state of the Union. So guess what? That's where the trolling comes from. So in any event, this has been one of those things that I've realized that now that we've made this more public, it's time for this community to be aware of these, because I've said this would be the greatest trade on earth. We can actually take sovereign bearer bonds, have some patriotic Americans that care about our strategic Bitcoin reserve. And guess what? We'll do a simple deal with the government, hand over all the bearer bonds, and then we can actually use that to fund the first $250 billion of the US strategic business, Bitcoin reserve without any delays at all. So that's kind of the summary of what's been going on, but it's one of the most historically amazing contexts because it intersects everything we care about, why Bitcoin was created, and more importantly, the nature of how governments are funded and sadly, how war is funded.
Hey, Punch, are you still around? Is Punchy still up here? Oh, there he is. Hey, Puncher, did you want to lead this
Yeah, I'm
segment?
here. So,
Yeah.
so Alan, if I'm following, obviously it's a lot to digest. How is this presented to them? And are you suggesting that the funds, the sovereign debt that we basically confiscated from Russia would be used now in 2022 when they invaded Ukraine would be used to fund the strategic Bitcoin reserve? Is that what am I connecting the dots there?
So think of the dots this way. So think of you have a fund that controls assets, whether you went into a bankruptcy court and bought up assets or whether you've purchased sovereign debt. Governments issue debt worldwide, country by country. And imagine you're just an investor, you buy these bonds. You start receiving some coupon payments against the bonds that are supposed to be paid to you at some interest rate, like 5.5% semi-annually. And for several years, you get those payments. And then lo and behold, a government is overthrown. In the case of Russia, it is the Bolsheviks who overthrew the Russian Tsar, commenced, the Red Terror and the whole history of 50 million ethnic Russian Christians being killed before the Bolsheviks were forced out and predominantly migrated two locations, unsurprisingly, Ukraine and Israel, which is kind of just an aside. But now you have still possession of all these bonds, and you're like, okay, how am I going to be paid? Because the successor government still has the same legal obligations. And
well, is that a fact? I mean, is that international law?
Legal fact? Yes.
Okay, and then separately, when the fall of the Berlin Wall happened, you could claim that was another revolution overthrowing the Bolsheviks, and now it's yet again another government that's quote unquote duly elected, even though we know it's not.
Yeah, so when you had when the wall fell, East and West Germany became Germany, right? So the assets and the liabilities get consolidated on the country's balance sheet, for lack of a better comparison. And now you have to deal with the monetary system in the same way that you did before. If you had equity in Mercedes-Benz or BMW before or after the wall fell, you still own those securities, much like you can own sovereign debt. So our pitch has been very simple, which is there aren't a lot of places you can source $250 billion of bearer bonds of sovereign debt. We would like to help.
Are they physical bearer bonds, and where do they reside?
So Physically, yes, that is how they literally, there are stacks and stacks and stacks of bonds. They sit in a vault on the Upper East Side of New York, and they've been in that vault for decades, waiting for a resolution of the outstanding government sovereign debt that needs to be paid back. So the way you actually do this, it's interesting. You would go in and with a scale, you would take a bond or two and you would create a sample weight for those one or two bonds that might be, denominated in 1,000, or it might be denominated in 10,000 or whatever. And you weigh them. And then after you get your test weight for the first bond or two, then you just drop stacks and stacks of the bonds on, and you do a physical inventory, pulling them directly from the vault, and you stack them all up and you get the weight that gives you the total number of bonds. And then on the bonds themselves, like each set of bonds are slightly different, but think of the way you would buy any other sort of debt instrument. There is principal, there's interest. Those coupons might be paid annually, semi-annually. But in these, because these date back so far, what's amazing about them is all of the gold provisions. So we all know what gold trades at now. And when gold traded at $20 or less with a purity and weight, back then they used to issue debt on purpose with inflation protection because the investors understood the value of hard, sound money, and they didn't want to be debased by fiat money printing. So in all these constructs, the gold provisions accompany the bonds right on the language. And then in the case of China, not Russia, but China, they come with a loan agreement and covenants. And what's interesting is those covenants in the Chinese state, they actually breached them in 2020 and 2021 by having Wall Street raise staggering amounts of debt for China when the liquidity crunch was on during the middle of COVID, during the shutdown. And those issuances of debt, turns out, actually breached the loan covenants from the original bonds, which stated that they had to pay off the debt before raising new debt or before rolling over that debt. And so at a simple level, this is, a private group, just like Elliott Management did with Argentina. They controlled the debt. They wanted to be repaid. And in that case, they were unable to successfully negotiate it. So they filed a lawsuit, went through, and you can go pull up all the outcome. In our case, we said, hey, we don't know what the best usage of this money and what these tools can be to help America. But I'm an ex-Army Ranger, so as good American patriots, said, hey, we think we have the right administration in that's going to be friendly towards Bitcoin and towards digital assets. We think that we're broke. We have $37 trillion in debt. We have $1.2 trillion of interest. There aren't a lot of $250 billion solutions out there. We saw with Doge how Elon Musk actually exposed a lot of those issues, and how USAID was used to launder money all the way around the world. So we said, hey, we have a need, we have an asset, and we have the ability to structure a deal that can actually be a net win for the US government. And we had no idea that we would see him as a path to using it to fund the strategic Bitcoin reserve, because 12 months ago, when I started diving deeply into this, there was no US strategic Bitcoin reserve discussion, really. There was no crypto framework. There was no market structure framework. There was no Stablecoin Genius Act. And you didn't have a digital asset, pro Bitcoin administration. So this is why, now that this other stuff has gone public, I wanted to share more with our community, because many of you on this have more connections into Cameron and Tyler and Saylor and all these others that are actively involved. We have our own connections and we're having active discussions. But we want to see if the community can help put the US at the forefront of Bitcoin globally beyond words by actions. And instead of saying we can do it if we can figure out where the money's come from, I said, hey, I can raise my hand. We have a group, we have the assets. Let's make it happen.
How do you have the assets? That's what I'm not connecting.
So the assets that we got control of have literally sat in bank vaults for decades from the original purchasers dating back from 1898 through 1937. And it turned out that there was a specific brokerage house on Wall Street that was some of the first ever. You can go into the New York Times from back in these days. They used to put the prospectus literally right in the newspaper. And these were sold back in the day as debt for these foreign countries in the same way that, once a month we're selling US treasuries and we're trying to roll over $10 trillion worth of US treasuries, which is why everyone's screaming about interest rates, because it's $100 billion a month just to service the interest on the 37. So these were just bonds sold by Wall Street to US investors. And
Don't
those US
don't those
investors
investors
have
still
held
have a
them.
claim, and their heirs still have a claim to these bonds?
Oh, 100%, 100%. They're a bearer instrument. So the holder of the physical paper, it's just like when you say, not your keys, not your coins. Bearer instruments, you literally are holding stacks and stacks of the bonds in the same way that you and I could own stacks and stacks of US debt.
Okay, so what has is this an access issue, or is this a we told them about it and then they blew us off issue?
Well, there's a lot of, I'm sure, geopolitical sensitivities. When I use the word carrots and sticks, no matter how much you see what goes on and how it gets shaped in the public, there's a lot going on that none of us know anything about, of course. Sitting around a table trying to resolve, a war between Russia and Ukraine, there's a lot of issues and a lot of horse trading that goes on in how and why and all the rest of that. So I think there's been desires to see between carrots and sticks. Are people going to respond better to economic issues that are, we're going to set up trade deals, we're going to do prisoner exchanges, we're going to do a ceasefire, we're going to commit to a buffer zone, we're going to commit to not adding Ukraine to NATO. There's so many issues that go in. I don't want to speak for what goes on in the heads of those that are doing these things. I think, our understanding is all that frozen assets that are, with a custodian in the European Central Bank, they get paid 1.5% of the frozen assets per year just to custody those assets that are frozen. So, one could say that there's an incentive that they have to not do very much other than collect 1.5% of $500 billion worth of assets.
So in a perfect world, Donald Trump would talk to you and have that as a stick or a carrot in a negotiation with, let's just talk about Russia. Let's just isolate Russia.
Sure.
We've already seized, I forget what the number was, 300 billion of their U.S. Reserves, U.S. treasuries, and just say, look, because, it needs to be in a revenue neutral way per the president's executive order. We'll talk about all these other things that you just laid out, and also we're going to not give you back that debt that we owe you. We're going to basically trade what we hold in these bearer bonds that you owe us in exchange for what we took from you. And that would create that $250 billion, and we're going to put it in the Bitcoin Strategic Reserve, and we'll call the debt good.
There's a lot of mechanics of how you can do it. We even have a new sovereign wealth fund. So at a simple level, you could say, okay, I have $226 billion worth of Russian debt. You're going to pay $5 billion to buy them from us. We're going to give you $220 billion. You're going to have a 40x mark to market return on the sovereign wealth fund. You're going to then seed that into there as an asset that you now own with a 40x mark to market uptick. And then you can choose to use it for trade. You can use it as a carrot or a stick. You can use it to monetize it through legal set off against the frozen assets and actually then use the proceeds to buy Bitcoin. So those are just mechanics that Secretary Bessent and Treasury can figure out with his chief of staff, Dan Katz, or someone in the White House, and David Sachs and the crypto czar can do it. And that's, I haven't seen a lot of people presenting a simple, easy way to be able to accomplish this. So we tried to say, hey, not everything in the world has to be difficult. It's a real credit to the original purchasers of these, not only that they kept them all these years, but more importantly, that they're willing to just structure a deal that could be overwhelmingly favorable to the United States and give severe optionality on the way in which those things are implemented or how those funds are used. But again, that's I haven't met a lot of Americans in the real world that actually want to fund foreign war. I just haven't met them. Not saying they don't exist, but nobody wants to see all this money just going to nothing. And most of it's being laundered. Everyone can now see that through the efforts of Doge and USAID and just all the exposure of these things. And we're like, I'm an American. I love this country. I've lived and bleed, almost, you put your life on the line for it. It's great. And I think this is an opportunity for the US to protect itself financially, whether or not it can, pay off the 37 trillion of debt or not, or how that's addressed, whether the Fed exists or not. There's a lot of issues and a lot of questions that we're not going to all solve here today. But it's very simple to say, I give you 225 billion, you give me 5 billion, you have 40x mark to market. And now what do you want to do with it? You can put it in the US sovereign wealth fund that was created by EO. You can use it to buy Bitcoin. You can use it to negotiate, settlements throughout the Middle East. Or, you could have NATO or the EU use it and effectively fund themselves to defend themselves and to deal with their energy issues that they have. And that's a lot of what really Ukraine and Russia, that whole war was about. That was about the oil and gas rights in Donbass. And Russia really controlled Donbass. So what did they really want to do? They wanted to drop Hunter Biden in Burisma with CIA. They wanted to use Nord Stream to create $1 trillion transfer of value from Gazprom and Russia supplying energy to all of Europe and replace it with a Western-friendly entity. That's what Russia, Ukraine is all about. We can look at all the color revolution we did in 2014. We can look at all the lies that we did about NATO. But at the end of the day, there was a $1 to $1.5 trillion market for oil and gas, and whether that was going to be supplied by Gazprom in Russia or Burisma in Ukraine. Except, oops, Russia already controlled where all the oil and gas rights were in Donbass. And that's the same issue that popped up with the rare earth element deal. So, at the end of the day, you realize all war is a banker war. And every one of these issues aren't what the public is told at all. Every one of these issues is, I have $1 trillion market. What am I going to do with it? Whether it's Operation Gladio and the CIA doing the global drug business and running the cartels globally, again, trillions of dollars. So it all comes down to bankers and money. And what we wanted to do is to help Trump and Besant in the United States in their financial war, which has been ongoing with the Bank of England and the City of London as one of the sovereign territories. Where Bank of International Settlements as another sovereign territory fits in that for Switzerland. As the central bank of central banks, we as Bitcoiners want to see all of it go away, I think.
No, I agree. And it's a lot to swallow. But again, is it an access thing? Like nobody's listening to you or wants to entertain what you have to say? Or you've already spoken to somebody and they've said, we're not interested?
Hey, can I just interject real quick too and just say, hey, if anybody wants to ask any questions, just throw your hand up and Punchy will work you into the mix. It's kind of interesting that the Bank of
Sorry. Let me get just your answer on that, Alan, and then I'm curious what Simon might
So
have to say about it.
we've had many talks with folks tied to the White House, folks tied with Treasury, folks tied with pieces of this. Most of those discussions have really started, obviously, over the last 3 to 4 months, because obviously Trump wasn't in till January. We're a little more than 6 months. He's still trying to get all of his staff confirmed. And honestly, I think there was a belief early on that was, this isn't my views, this is just public views, of this was going to be something in the first 100 days of Trump's administration. They were going to get a ceasefire and we were going to not have, all this countless unnecessary deaths between Russia, Ukraine over a problem that we created. And that hasn't happened yet. So whether people are playing nicely or not nicely, I'm not in those conversations. So I think there's an awareness of this, and then it really becomes an agenda-oriented thing. I think folks like Bo Hines and Tyler Williams were very nice. I said hello at the Bitcoin conference. I thought they were great people to start off conversations, and they have promised to follow up. Haven't heard back from them. Obviously, they've been working on the Stablecoin Genius Act. They've been working on the market structure. They've been working on the frameworks for all these things. So I believe it's just a matter of the bandwidth, candidly, because we've Donald Trump himself is aware of this. He wanted Treasury to look at it, which made sense to us. And literally, it's as simple as U.S. Treasury weighing the bonds and consummating a deal, and then they geopolitically can decide what makes the most sense at the table for the use of those funds.
Got it. Simon, is Simon still up?
I'm here, brother.
What do you think?
I need to re-listen, Alan. You spoke so passionately that I couldn't quite get my head around the construct. So they're bearer bonds that I understood the history, but they're bearer bonds that exist where and owned by who? So you said they're owned by investors, but custodied with some kind of bank you work for, or?
Oh yeah, so they're in a bank vault that are in safekeeping, just the way people would have any other sort of bearer bond instrument. And there is a custodian and access and all the normal protocols you would use to secure something of that value.
Okay, so individual investors have a bunch of these bearer bonds, and there's a bank that's custodying them, and they are whose debt is? Did you say it's Russia and China's debt?
Yeah, so the the $226 billion piece that I was talking about, that is Russian debt from 1916, right before the Bolsheviks killed the Tsar. And then they had never resolved the outstanding liability, more than 109 years later. The Chinese are lesser in gross value. Those are about 15 billion that range from 1898 through 1937, predominantly in British pound sterling. And so what's just fascinating on historically is, anything in US dollars obviously has different pieces as to, does the Gold Act apply? Does the Gold Act not apply? Things in foreign currencies, obviously that's not the case at all. And these actions become legal actions that we took really to get the appropriate attention because they were sold to US investors. So that's why you have a venue here in the United
Okay.
States.
So you got U.S. investors that are basically custodying these bearer bonds with this bank,
Correct.
and the vast majority is owned by pre-Soviet Bolshevik Revolution Tsarist Russia. Yeah.
Yes, the
That's
imperial government of Russia was the original issuers. Just like in China, there's a series of state-owned
yeah,
enterprises that typically
because
originate those.
this was when like all the the serfs controlled the majority of the land, and there wasn't too much debt. So that would have been the entirety of the entire Russian debt, right?
Yes, it's interesting is that that by default means we're the largest owner of Russian debt on Earth, and it's the only debt that's unpaid from Russia on Earth.
Yeah. Okay. And so, whose balance sheet do these bearer bonds sit on right now? Are they on Treasury's balance sheet?
Oh, not at all. They're on our balance sheet.
Okay. Yeah. Sorry, they're owned by investors. So
Yeah.
the investors, did you buy them from the original investors? Because they're all like old or dead right now, right?
Well, so the brokerage firm that originally was involved in buying everything on Wall Street is the group that we ended up doing the work with. So they originally purchased all the debt, not just Russia and China, but many other. They were a large brokerage house focused on sovereign debt worldwide and sort of exotic financial instruments, in addition to artwork and some other kinds of collectibles. And so they, my one of my partners on this is one of the preeminent bankruptcy attorneys in the United States who worked for a large New York firm for years and years and years. So he hung his own shingle, and one of his past customers who controlled all these structured a relationship with us to be able to monetize the bonds and actually be able to, pursue these angles of, helping the United States.
Yeah. Okay. And so the proposal is, if America and Russia are engaged in diplomacy over Ukraine right now, and because Europe has got the seized funds from the Russian central bank, that you'd somehow like to tie the monetization of these bearer bonds and cancellation of Russia's debt into some kind of diplomacy agreement, and then they could be monetized to buy Bitcoin. Is that the proposal?
Yeah, at a simple level, you do a very specific structure between the owners of the bonds and the U.S. government, and then the U.S. government decides, what it wants to do from there, and that's, their right to do so. However, you're right. Like if you think there's $600 billion of Russian assets around the world frozen, and there's some deal where effectively 1/3 of that is offset to rebuild the territories, to provide the relevant defense investment, to offset some of the energy problems throughout the EU. All those things are viable uses of proceeds, so to speak. But at a simple level, the only legal means on Earth, to go into effectively a charter of account, a ledger, not Bitcoin, but a ledger for the government accounts around the world for global trade. The only legal remedy is something called set off. And you can use set off when there are outstanding liabilities. It's no different if you were a deadbeat dad. A court order says, here's the amount of money the dad owes. They drop it at the bank, and that money goes to the spouse or the kids or whatever that situation is. This is the same thing. And nobody in the G7, nobody wants to touch anything that involves seizing assets or reparations for some activity, because then every one of them would be subject to the same seizures and reparations in reverse. And so therefore you're down to, okay, what's the legal means? The only legal means in the United States is called the Repo Act, REPO, but that would only allow for 5 billion max, which isn't going to solve $250 billion for any of these potential uses, yet alone, funding a big stack of Bitcoin. We're advocating using the proceeds for Bitcoin. They could choose to use them for something completely different. And obviously, if having the same, I'm trying to do the conversation in the United States for the benefit of America, but the European Union or NATO, obviously, where are they going to get all the money from? They've been talking about seizing the savings accounts of European Union residents, as a means to fund their defense. Like, how well is that going to go over?
So do these bearer bonds sit on Russia's liability on their balance sheet at the moment? Like, are they actually recognized or not?
Oh, of course. I mean, just go look up the Russian 1916. It's really no different than when a corporate like Sailor's issuing debt. There's recourse or non-recourse loans. There's loan agreements. There's covenants. There's conversion rights. There's all the things that go along. And we
They still recognize the debt. It's not like they're just pretending it
yeah, I
doesn't
mean,
exist.
in some cases, some of the regimes try to they use a formal term. They'll say we're going to repudiate the debt, which means we're going to act like we don't have to pay it. But then you have to somehow pierce one of the oldest standing laws in human history on Earth is the successor government doctrine, which basically says, whether you were dealing with Yugoslavia that got split into Bosnia, Serbia, and all the whoever is the surviving entity, and whether that's communist, socialist, capitalist, a democratic republic, doesn't really matter what the form of government. It could be a dictatorship, but whoever the winner is effectively inherits all of the debt and all of the assets, and then they have to deal with it. As Argentina
Yeah.
learned, great thing to look up is the recent ruling for Elliott Management in Argentina. And the U.S. courts said, hey, Malay, you're doing a great job. That's fantastic, but you're not getting out of the $800 million you guys owe on your debt. And so they gave Elliott Management the right to seize assets.
I think that was done by a bank for international settlements as well. It's interesting tying together the. I mean, firstly, really interesting initiative. Seems like impossibly hard to achieve. And what I'd say is like, yeah, I mean, this is just such an interesting project. But obviously, it 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 it, it hinges upon those that control the US being good actors, and the banks would never want to engage in anything that pays down the debt. And so BlackRock and the banks and the Fed want the US government to be in perpetual debt forever. So any initiative to pay down the debt is going to get deep state pushback. And of course, anything that leads to peace is going to be a problem for the military faction of America as well.
Yeah, so you and I agree on the, war is not something anyone needs, and no one appreciates peace more than soldiers do. And I can say, unless you've had to look down the barrel of a live loaded round, being told who good guy and bad guy is, it all sounds very, opaque. But I 100% agree that the reality is that we as a country, we as a citizenship, much like you guys over in Europe, have to either address and solve and remedy these. And instead of everyone just bitching about it, I've looked at Bitcoin as one solution to that. I got involved in this particular project because it ties directly in to accountability and responsibility financially. And this is something where, politicians can play politics and even bankers can play banking. The reason we finally put all of this into very specific lawsuits in two cases in DC, one against China, one against Russia, and then three other cases, really, two in New York, one in Chicago on the Chinese bond side, because U.S. courts, completely separate from these other issues, they have to rule on contracts, as you know. Nothing's going to go up to the Supreme Court that deals with a loan agreement and covenants. It's not hard to understand what a loan agreement says. It's not hard to understand what the covenants say, and it's not hard to know if someone's breached it. So most of the people, whether it's Southern District of New York or Washington, D.C., these issues are dealt with all the time globally because some countries can't repay their debt and it has to be restructured. Others figure out means to swap assets for debt. Or state-owned enterprises for debt in the case of places like Brazil. And so this is what happens. And the courts aren't going to say, hey, what are they going to challenge? Okay, you're holding the bearer bonds in your hand, but you're not the owner of them. These are issues that the courts are going to rule based on contract law because these are financial contracts.
Yeah, the original self-custody.
Exactly.
Hey,
Yeah.
can we get BTC Noah? Uncle Noah's had his hand up for a second. Can we sneak him in there? But an interesting point before we go to Noah is you guys keep mentioning the BIS, the Bank of International Settlements, and Alan had pointed out, it's pretty much the central nervous system of the entire central banking system today. But it also started out as a reparations vehicle for war.
Right.
So that's an interesting note there as well. Go ahead, Noah.
Hey guys, appreciate it. And with Loren, which you're speaking of, Simon recommended Tower of Babel, which is a really great book that explains all that. But I have a lot of experience actually with this, trying to collect money from just people that owe you money over years in business. I've done a lot of research in like collection agencies, but it's kind of like
Have you ever tried to collect debt from Russia?
Never. Exactly. So this is kind of like an uncollectible
Can you not call up Putin?
Yeah, right. I have him on speed dial. This is like an uncollectible debt where we're trying to use the frozen assets. The organization, it probably purchased the bonds, pennies on a dollar, and trying to use the frozen assets to collect that debt with a 5% fee. Just to break it down in a simpler context. So basically, 5% fee to collect this debt, and then leverage the frozen assets to enforce the debt. Which the U.S. government, they have the assets, so it's a matter. It's kind of like it could be a diplomatic nightmare. That might be the reason why they're not engaging.
There's definitely truth to that, except the difference here is, let me make one thing super clear. There was no buying things for pennies on the dollar. This is literally the original purchasers buying at face value in the late 1800s through the 1900s, literally buying bonds the way this week you and I could go buy, U.S. treasuries identically at face value. So this isn't something where people were going out trying to find things to collect at pennies on the dollar and see if they could make a little bit less through some collection. This is literally like you bought the actual face value, you hold the physical bearer instruments, and you were paid for a period of time and then they stopped. In the case of Russia, they paid off all of the others in the late 80s and 90s as part of mandates, where they basically got blackballed from all market exchanges and all British and French investment unless they resolve the issue.
So the
Because
original, I'm sorry, go ahead.
yeah, yeah. So that's the nature of it. But you're correct in that what we're doing is looking at this after all this time and finding a way to say how can this be a win-win and a big win for the United States government, and how can we force peace, if you want to call it that. And I think that when you get into the law, if the law matters anymore, and we could all debate about what laws matter anymore in light of recent circumstances, but property law is usually pretty straightforward, and the only legal means to access those frozen assets globally are through set off. And set off is something that, if you're a big Wall Street bank, they do this all the time. They own debt tied to private companies, public companies, governments, all these other kind of derivative contracts. If there's something that they need to set off, that this isn't something where you have to go get the approval of the organization. You go to the account and they set it off based on either a judicial ruling or a governmental action.
Okay, are you saying it's equivalent to like Treasury offset? Is that what you're referring to?
Yeah, the legal term is called set off for this, but
Okay.
there's a version that Treasury has to do different things. But yeah, it's because, like I said, the G7 is not going to seize anything because the consequences are hell, and reparations, barring global wars that the bankers got us involved, and they try to set up commissions, and the history of World War I and II and the BIS. BIS was really created not because it really was supposed to be for reparations. That was the excuse. BIS was created to have a sovereign, untouchable vehicle in Switzerland where all the transactions and activity could be kept completely private, that no one would ever see, for other central banks around the world to do their transactions in complete private. That's why it was
So
created.
I do have one more question.
And to fund
Okay.
Hitler.
Yeah.
Let's
Yeah,
not
be
forget about that
careful,
one.
Ellen. We don't want to get Simon
What,
started, or you'll never get the mic back.
one more question. The original bondholder, heirs to the original bondholders, they hold the debt, or was it debt acquired by an institution that's actually holding it in custody?
No, this particular brokerage was created and funded, started, and grown. It still exists today. I just met the CEO on Friday when I was up in New York City, and this is a version of Goldman Sachs that most people are less familiar with. But till they're ever officially named, they'll remain anonymous. But they're and fully operating brokerage today in the United States, who originally purchased these when J.P. Morgan and other Wall Street banks issued $50 million worth of Russian debt in 1916.
So
Okay, yeah, because that's a key point, that the original ownership, because had it been purchased, then that would change the custody. So okay, thanks. I'm done. Thank you.
so
Punchy, are we losing you
Alan,
there, buddy? There you are. You're back.
yeah, a phone call came in. Alan, so boiling this all down, if Trump understands that we have this debt owed to us, quote unquote, in the amount of $250 billion, and we seized Russian assets when they rolled into Ukraine of, I forget the number, let's just say it's 300 billion. Donald Trump, acting on behalf of the United States, and Vladimir Putin, acting on behalf of Russia, can say, look, you owe us this $250 billion. We seized your 300 billion. Let's call it even. And then forget about what the use of the proceeds would be. Let's call it even, Steven, me and you. And then they would take those bonds, they'd pay off whoever is owed, proceeds from those bonds, and the rest of it would go into a Bitcoin strategic reserve. as
I mean, I
revenue
think
neutral. We
that's
finally,
a more
and by the way,
complicated version. That's a more complicated version of it. But sure, I mean, it can. Like I said, we can do a deal with the U.S. government whenever we want or whenever they want, and then once they have possession of the bonds, we step out of the way, and then the administration does what the administration does. We've
sure,
advocated that
taking
the
you
use of those
guys out of
proceeds.
it. Yeah,
Yeah,
taking
we
you
believe
guys
the
out
use
of
of
it.
those proceeds should go to the Bitcoin Strategic Reserve. But if they were going to do political negotiations, that's why we have them in office,
Yeah,
and they
it's
need
a
to make those calls as to what works best for what the real situation is that we don't know.
it's a big stick. And by the way, it could also go a long way into potentially, not that we want this, saying the reason we did that is because you owed us money. The reason we took money from you in 2022 is because you owed us money from 1916, and now we're
Sure.
even. And maybe restore some faith in what has been lost, because obviously when we seized um, assets from, I think, first Ukraine in 2014 and then again with Russia, I mean that is the galactically most stupid thing you can do, because everybody in the world says, oh, they can just steal my stuff, maybe I don't want to hold their treasuries anymore. It would be a lie, but it would be a
Right.
plausible excuse for saying the reason we did that in 2022 is because you owed us a shit ton of money dating back 100 years, and now we're even.
Yeah, and the reality, that's why we say that sovereign debt, I used the analogy when we started this, it's like herpes, period. It never goes away until it's resolved. And the only two countries that have yet to resolve their outstanding historical debt just happen to be Russia and China. And so we have
Hold
these.
on, but US doesn't owe the debt to it. It's investors.
No,
So
well,
how does it become the US government's debt?
no. What I'm saying is, so perhaps I'm either being confusing or not confusing. Let me try. So China issued debt that is unpaid. Russia issued debt that is unpaid. The debt that China and Russia issued, most of the free world believes that if you issue debt and take money from people under a set of circumstances for your loan agreements, that you're supposed to pay them off. That's completely independent of the US government issuing debt. But yes, Bessent is in the middle of trying to refinance $10 trillion of debt. Now, the US could say what? They could say, oh, we're going to repudiate the debt. We're just going to act like the 10 trillion doesn't exist. Go fuck yourself. But that's going to radically alter, everything about the government, the finances, the sanctity of, the secured backing of the US government, whatever
Sorry,
you want
yeah.
to call it.
How are these two connected, or are these two different conversations?
No,
Because
they're
basically, a bunch of investors own bearer bonds issued by China and Russia. How does
correct.
that then connect to US?
Yeah,
No,
that's
that
the
just means
question.
that we
That's
have a
the question.
vehicle that we are trying to provide to the U.S. So it's one thing, like governments all the time say, oh, we'll give you 70 cents on the dollar, or people in the U.S. government get offered, oh, do you want these Cuban bonds at 50 cents on the dollar, or 90 cents on the dollar, whatever. Like that, those are just normal operations globally, and probably the World Bank, the IMF, the Fed, all these different groups. It's a little bit different. In our case, we look at it as saying, okay, we're going to take a 2% fee. That'd be like 2 cents on the dollar. We're going to gift you 98%. And now you're going to have $250 billion of non-US taxpayer money, because it's sourced from, in the case of Russia. And you can do whatever you want with it. You can use it to
So sorry,
backfill.
mate. Just so I hear that is, you're basically asking the US government to be like a debt factorer to essentially guarantee the purchase of the debt and then negotiate a deal,
Well,
the
I'm just
bond.
saying that we can actually, put a 40x mark-to-market win on the U.S. government's balance sheet and its new sovereign wealth fund, and then they can choose, when they take physical possession of those bearer bonds, they can choose to do whatever the hell
So
they want
basically,
with it.
you want the say there's imagine there was a US sovereign wealth fund.
There is.
You want them to purchase these assets contingent upon them turning some value into, give them an option on the bearer bond. Is that what you're saying?
I'm not saying an option. I'm just saying that one way to structure it is very simple. You say, here we're going to take a 2% fee. We're giving you all of the bonds, and then the Fed shows up at the bank vault, weighs them, confirms the inventory, moves them all in its possession, and then it can do either nothing with them, other than take a mark-to-market win, or it
But
can
but
actually.
what about the original investors that are
Yeah, that's the
entitled
question. What
to own the
if
bond?
let me put it another way, Alan.
The
If my
original
great
investors
if
would
my
take the
great
2%
grandfather
fee and move on. They'd be
if yeah,
done.
if my great grandfather bought these bonds and I'm the rightful heir to one of those bonds, do I get screwed or do I no longer own that bond?
No, okay, so I guess we're making this confusing. So if you have a stack of bonds and you basically sell the bonds to the US government, you basically are done. All those people are compensated for their ownership because they took the fee, in that case, the 2% fee in return for all their bonds. And then the US government's
I
going to use
see.
the other 98%.
I see. So I'm getting something. I'm just not getting the full face value of what I thought I was owed by the government of Russia.
Right. These, it's pretty remarkable to represent a group of folks that invested at face value back in, 1916, who are willing to say, "Great, we'll do a deal," because they're unhappy about what's going on in the world, and they see that there are carrots and sticks that can potentially solve this. Um, and they're looking at it both from a financial perspective and a patriotic perspective, is the only way to say it. And God bless them. So I wouldn't be having this conversation and trying to help further this along without them wanting to see substantial change for the benefit of our country, which I'm thrilled by. So
Yeah.
it's an easy thing to represent and evangelize, and it's an easy thing to work. And I did stay at a Holiday Inn Express, but I'm not a lawyer. So we have great legal representation to force governments to pay attention,
Yes.
because as you know, without providing a stimulus in some of these cases, it just sits perpetually forever.
Yeah, that was just a missing connection that both Simon and I didn't see. They
Oh,
have
okay.
agreed. They have agreed to the 2% deal, essentially. The rightful owners of those bonds.
Yeah, we have
The
latitude
press.
in there, but that's it's probably,
Yeah, that's the missing piece. Okay,
yeah,
so you got
Yeah.
it's probably
All
a
right.
3%, but it's a net 2% because there's always taxes.
challenge is that even if the US government wants to do it, the military and Russia probably don't want to end this war unless you can compensate Lockheed Martin for their profits from this war.
Well, true,
And
but
so
if
you'd have
you're
to tie the important players that are profiting from the war
right,
into the deal, which means negotiating with the deep
Well,
state.
that's a separate.
well,
That's a separate conversation
yeah, there's a
altogether.
there's a great irony in that, who needs the money the most is probably the EU and NATO. And what would they do if they had access to all that? Is they would then take.
The EU is vassalized. They're not acting in their own self
Oh,
interest.
I sure, but
They're acting for Lockheed Martin and BlackRock.
yeah, but now they have $220 billion to pay Lockheed Martin and BlackRock.
Hey, Alan.
True.
So,
So you'd have to buy your way out.
so Alan, I can connect you with Bo Hines. Bo Hines is by no means a shot caller, and you've already talked to him, and it seems like he's blowing you off. I can make that direct connection again, and if you want,
Yeah, I said hello to him face to face at the Bitcoin conference, and he provided his email to send the stuff over. And like I said, I give them the benefit of the doubt because he's working with the priorities of President Trump and David
yeah,
Sachs, his boss, and they had three big items that had to be addressed before even looking at these. I thought that in the first 100 days they were going to try to solve Russia Ukraine, and as a result that this might be a higher priority, but clearly that's not played out the way that they may have anticipated. I don't know. Again, I'm on the outside, so I don't know explicitly, but it would seem that that didn't play out the way they thought. So they prioritized, the report that just went out. They prioritized the Genius Act, Stablecoin Act. They prioritized the Market Structures Bill, and then of course the Bitcoin Act was, amended and revised to be the Bitcoin Act of 2025. And now they're trying to work through that. And that's yet to be officially done. And obviously, the report was due 6 months from January 20th, which was July 20th. It just came out. And it doesn't mention really anything about the strategic Bitcoin reserve. There's lots of commentary of, oh, we'll use the tariff money for the strategic reserve. We'll use Doge cuts. Like, there's probably a lot of ways to fund a lot of different things. But I kind of look at what we've been trying to offer them is a meaningful chunk of cash, 2% to us, I kind of thought was kind of funny because they're paying 1.5% per year on all the frozen Russian assets, $600 billion globally every year for the custodianship of that. So I'm sure the custodian just loves getting that without doing anything with it.
Yeah, to put a nice bow on all of this, I'll connect you with Bo Hines, giving them the benefit of the doubt that they had other priorities. But the two things that you mentioned that they said they were going to deliver on, they haven't. Number one, ending the war in Ukraine. Number two, funding the Bitcoin Strategic Reserve.
Yep.
At a minimum, this is another arrow in POTUS's quiver that he should know about. And I will make that connection if you want me to do it again.
That's fine. And it's interesting because that's exactly how we positioned it with them was you could choose to use it, you could choose not to use it, but you have an arrow in your quiver and you can decide on carrots and sticks. And, $1 billion, 5 billion doesn't probably get the attention, but 225 billion probably does.
Yep. And here are our terms, 2% as the bearer of those bonds.
Yep.
Got it. Okay. Dude, that's super interesting for those who were following along. That is super interesting. And I will make that connection. I don't know if it'll go anywhere. Obviously, it has to go much higher than Bo Hines, who's been at his job for a cup of coffee. But yeah, happy to do that. And it'll be a direct connect. And
yeah, it was funny because I reached out at the conference when Cameron, Tyler, and David Sachs were talking about both in the whale room and outside about the need to fund, and then that was overlaid by David Bailey, and you're kind of like, okay, so I've been going to these things for years and years all over the world too, and we used to have a very small group of people, so it's easy to have everyone meet. It's a little bit more complicated now because it's so large. But it's been good to meet folks. I think everybody's intention are always great. And then it's just a matter of, what kind of fire hose and priorities are people getting forced to look at and in what order.
Okay. One request from me.
Sure.
That's a lot of shit. And I'm sure over meeting Bo Hines at the Bitcoin conference, you may have spewed it all to him, but he sure shit didn't digest it. I don't believe. If you have something that summarizes it, I can roll you into a chat and make the direct connect, and then I'm sure this is going to require much further discussion. But at least,
yeah. Well, just shoot me a DM. I'll shoot you an email, and I can basically show you what I've already sent him. So I'm sure he's aware of this. It's just a matter of, it's kind of like a laser firing. There's a lot that goes into it happening, and it takes a while for all the particles and all the energy and all the things to hit just right, and then it finally fires. And sometimes when you're dealing with, you've got White House, you've got Treasury, you've got geopolitics, you've got ongoing negotiations, you've got military activity. So there's a lot that has to go in before you start going, okay, now fire at whatever that tactic or that strategy is. And I appreciate that. It's a complicated process. And I'm just excited that really being one of you guys and, all of us are trying to find ways to get the public to understand central banks and, where does war come from? How is it funded? Printing money? Why do we need Bitcoin? It's all great. But instead of us always just talking about these things, we're in a position, hopefully amongst this great small grouping of community, to actually make shit happen. And I think the election proved that the Bitcoin community mattered in the Trump election. And I think that we should hold people to account, and they should pay attention to us because we have the interests of the country at the heart of what's going on. And, I know what it's like to grow up with a dad as a Mason, and none of my parents went to college, and we were very, very poor. Greatest country in the world, but fuck, we need to re-find ourselves from the bullshit of the last decade.
Totally agreed.
100%. Yeah.
And guess what? That was awesome. And now that we know about it, we can amplify it. And when things get amplified, they tend to get, I was in the military like you. Whenever I had a small problem that wasn't being addressed by my leadership, I turned it into a big fucking problem. And then it became addressed.
Amen.
I know Alan said he only had an hour, and I think we may have gone over that. So if you need to make your Irish goodbye, was it, Punch? Is that the right term?
Irish goodbye, yes, sir.
Yeah. I know some people were lost along the way, too. This basically
12:30, so yeah, I'll hang for a few minutes, but I appreciate
we appreciate you coming in here, man. And
and we can come back and circle up
yeah,
again
that sounds
as things
great.
unfold.
The price of
Oh, here for
money
you, buddy. Oh, let me just push the button.
determines its value.
Prices determine the value of money.
There you go. That's for you, Gary. No, I think if you guys look in the nest, there were some people that were lost. Basically, we're just talking about legal or ways that we can actually fund the strategic Bitcoin reserve. So Alan has some amazing ideas. We got deep in the weeds on the how and whatnot, but I think what he is saying is like, hey, if you're connected in any way, like Puncher is, no, the Winklevi, anybody, let's put some pressure on these guys so we can push ideas like this and make it happen. So we really appreciate you coming in here, Alan. Let's kick it over to Simon, who has his hand up.
Yeah, I was just going to kick it back to I think Fred's original conversation. It was good to see Richard Werner on Tucker. For those that don't know, prior to the Bitcoin community, there was the monetary reform community, and we gave quite a lot of presentations together. So it's good to see him re-emerging. But these were the days when you couldn't, like the way he was speaking, it may sound obvious, like when he's talking about credit money and stuff like that. But when I used to give presentations pre-Bitcoin, I used to go down like different colleges in America and many in the UK, and present on exactly how banks and money is created. And for those that know, like universities are funded by corporate agendas, just like governments are funded by lobbies. And so, what you're taught in economics is a version that they need you to hear in order to be a good little Federal Reserve worker. And so, when I remember when we used to give these presentations on credit creation and stuff like that, I got chucked out of London School of Economics, Birkbeck University, and never to be invited again just for explaining the truth about banking. And it kind of reminds me of like what's happening with this whole Duma scenario right now. So prior to Bitcoin, we had to explain how banking works, and you'd be called a massive conspiracy theorist just for explaining how banking actually works. And then you can imagine Bitcoin came along as the solution. And then we went through the whole Bitcoin adoption cycle, and everyone said it's a scam, it's a Ponzi. We had to go through that whole journey, and we still get some of it today. But now you've still got this whole, like, I've just been through this cycle so many times in this journey, and now you've got the whole, oh, you're crazy thinking that there's something up with with the financial system and a Duma for kind of prophesizing things. But what's really interesting is Richard. He was actually, if you watch the interview, he was involved in quantitative easing at the Bank of Japan, and it kind of exposes that the Bank for International Settlements created the European Central Bank. The Bank for International Settlements was essentially a mechanism for funding Nazi Germany and eliminating reparations, but it was framed as something to manage reparations, which it was originally. And what Richard has always exposed from his work in Japan in quantitative easing is that the Bank of Japan is an offshoot of the Federal Reserve. And the Federal Reserve, was created around to facilitate income tax, World War One, and World War Two was the mechanism for creating the other two parts of the prongs, which is the International Monetary Fund and the World Bank, which was about perpetuating dollar enslavement around the world through covert weaponry. And so, what you would do if you've ever read a book like Confessions of an Economic Hitman, you would force dollar dependency upon a country. You would engage in colored revolutions to overthrow the government. You would install a puppet government. And then with that puppet government, you would force them to work in US interest and subject its people to massive debt. Then they would install, as the condition of the IMF loan, they would install a central bank that would just serve the interest of the Federal Reserve and this network, as it were, but at the expense of the people. And it was just a mechanism for privatizing the country, securitizing it, and transferring all the wealth and debasing local currencies and then forcing the governments to invest in US treasuries. And so this was the mechanism. And the Federal Reserve was created not to stabilize prices, determining the value of money, um, but actually, a mechanism for transferring wealth. And he exposed that with the lost decade in Japan. And that was the plan already. And so it's good to have people like Richard come along. And there are many people in the monetary reform community, before the Bitcoin community became the solution, that would just be called absolute conspiracy theorists. And I think it all ties into what some of the things that we face today, as we become way, way, way more conscious around. And so, then it ties into a bit of what Alan was talking about, and that is that the same people that funded the Federal Reserve and the first governor of the Federal Reserve was the brother of the Reichsbank, and the Reichsbank was the bank that funded Nazi Germany, and it did it through the Bank for International Settlements, and it also funded the Bolshevik Revolution, which was a way of overthrowing the Russian government that was debt free with a gold-backed currency, had the largest gold reserves in the world, as did Germany. And those German gold reserves, those British colonial gold reserves, and those Russian gold reserves all ended up in Fort Knox. And then through all the different wars, you end up in the situation right now where they confiscated all the gold from the American people. And now no one knows who owns that gold because the Federal Reserve has probably collateralized it, and it probably doesn't belong to US Treasury. So I just find it fascinating that all these things are coming together. And when you unpack and follow the money rather than following the media and the politicians, you will be called a conspiracy theorist. You will be called a doomer. You will be called all these names. But actually, we're getting so close to the truth. And we got the solution, and it's Bitcoin, and it's self custody, and it's self sovereignty, and we can drain the whole system by owning our own Bitcoin, and that's the exciting opportunity of today.
Very well said, Fred.
Yeah, so I have a few points, but I also want to. I have a question for Simon. Simon, do you know Richard Werner?
I do,
And
yeah. We used to give
yeah,
presentations together pre-Bitcoin.
great. And is he a Bitcoiner?
He thinks that he went down the whole Bitcoin is created by the CIA.
Okay, so he never bought Bitcoin, right?
I haven't spoken to him since those days, but he was pretty skeptical of Bitcoin for a long time. I'm not sure if he's capitulated yet.
I was just thinking he would be an amazing guest for Bitcoin Today. So if you could possibly reach out to him, I know that a lot of us would love to pick his brain, even if he is sort of skeptical on Bitcoin. I still would be,
especially if he is, yeah.
Maybe even especially, yeah. I think we'd love to get him on his space, So that's my first request. Just and if he doesn't respond, he doesn't respond. But I tried to follow him on X, but he's got one of these X accounts where you have to kind of apply to follow him. So let's see. I applied, and my comment on this thing. So first of all, I loved that video, and after working at Salomon Brothers in the 80s, in the 90s, the early 90s, I worked for the second largest bank of Japan, which was Long-Term Credit Bank of Japan. Visited Tokyo many, many times and got to know the Japanese system very well. And so, I can relate to a lot of what he was saying about, the madness of the sort of the Japanese banks. But I really don't agree with him that this was all a plot of the U.S. to bankrupt Japan. I don't think that was the case. And but what I do think is interesting is, this idea of banks lending, lending to buy assets. I wonder if this is not going to bite us in our ass with Bitcoin, because in a way, what I'm sort of seeing with MSTR is sort of that. And I wonder, could Bitcoin be kind of the next version of the Japanese real estate bubble, where it's even, and again, to put things back in perspective, in Japan in 1980, the land around the Imperial Palace was worth more than California at the kind of current valuations at the time. And everybody got involved in this Japanese real estate game. You had these things called intergenerational mortgages, so your grandchildren would pay your mortgage. And so the question I have is there a bubble forming where banks are in fact going to be lending money against Bitcoin, much in the same way they lent against Japanese real estate? And with the finiteness of Bitcoin, could we not see a major bubble that is created, which then leads to a major crash in that bubble, right? Again, having literally been in Tokyo the day the Japanese stock market peaked, that exact day I was there on the Nomura trading floor, and and kind of working for LTCB. So I kind of knew this stuff very much deeply. I witnessed it myself, and I know a lot of the people kind of who were involved exactly at that time. So I don't know. I do suspect that we might be in for a similar type of event with Bitcoin replacing property in Japan. So I just wondered what everybody else thought about that.
Fred, you're actually suggesting that all of these Bitcoin treasury companies that are getting levered and whatnot could be the next like FTX type moment that actually is a catalyst for that kind of a.
I'm just suggesting that, look, we these banks. Well, I think he makes this really good point, which Darkside brought up, right? Which is small banks lending to really productive small German, what he calls in the video champions, right? So they're fantastic at some kind of form of chemistry or metallurgy or something like that. That's kind of what built Germany up into the power that it is, right? And small banks leading to British building societies buying overpriced real estate in the UK does not lead to the UK becoming the next world power. Right. So, his formula is, that's there these bubbles happen because banks are kind of lazy, and they like to they like to lend against something at like property. I think they're not yet in the mode of I want to lend against Bitcoin, but I think we're getting there. And I think we could get to a point where 5 years from now, maybe it's 3 years from now, I don't know, but there some point we're going to see this financialization of debt oriented at buying Bitcoin, because it's very much like the perfect asset that you want to buy against. And that could lead to a spike and a crash.
Hello?
Does that make sense? I don't know. That's
Yeah, no. Darkside, go ahead.
Yeah, no, yeah, Fred, no, that makes total sense. And just to kind of go over this real quick, what he presented was that the German chemistry business, which eventually led to BASF and some of the world's largest chemistry companies, the world's largest in BASF, really came out of Germany's desire to try to figure out uh, how to alchemize gold, right? They invested all, I think he said all, I forget the number of provinces, 188, something like that, of the German states were investing with chemists to try to figure out how to create gold from chemistry, because of gold being perfect money. Kind of funny, right? When you think about it in terms of Bitcoin. But that was the what created the German chemistry business and kind of propelled chemistry to where it is today. Look, you know, this video is so important to watch because he does lay out fundamentally that economics, the entire kind of study of economics, the science of economics is complete pseudoscience, right? And the reason he lays out in the very beginning of the video why it's pseudoscience, right? Because there is no mention of banking in the study of economics. And that's why they're able to get away with all the scams they do, because in the end, it's the banks that create the money. And the whole thing's just so good, right? Like it's so beyond good. And to his point, did the CIA or NSA create Bitcoin? Does it really matter, right? I think that's the bigger question.
It doesn't
And if
matter.
they
It
did,
absolutely
yeah, it
doesn't
doesn't,
matter, and
right?
also, it doesn't really matter who owns it. To Thomas's point earlier, is does it matter if, Saylor has, 600,000 Bitcoin, or does that? No, it shouldn't really matter. It's not a proof of stake network. It doesn't matter. Owning that much Bitcoin doesn't give him an advantage. Now, you could argue the replacement value is higher, that, okay, there's very few companies that could buy MicroStrategy. So, would they buy it at such a premium? I don't know. But yeah, no, I don't think it matters if the CIA, in fact, but the CIA did not create Bitcoin. That's just not accurate. But even if they did, it wouldn't matter. It's open source code.
Yeah, and what's funny about that is how many times does the government create something that ends up getting out of control, and they lose sort of scope on it, right? So if areas of the DARPA and that kind of area of government did create Bitcoin to create and help fund their dark budget, wow, did this get out of control,
Well, they
right?
did create the internet. I mean, that they did.
Yeah, yeah, but again, it doesn't matter. Anyway, back to the video. So important. Please watch it. I really do believe this could be the Minsky moment if enough people watch it, if this goes viral enough. Werner deserves to be on every major
It
podcast
would be
in the
amazing if he was a little bit of a Bitcoiner. So, I know Simon's back, but it'd be great if, there was a little bit more of a, if he was, if we could sort of convert him a little bit to the Bitcoin way of seeing things, because, this is a great video, but it needs the next part, which is, okay, how does Bitcoin fix this? And, it was sort of missing from that video.
So let me fill in a bit of the gaps, Fred. So the monetary this is well, I think it's interesting anyway. So we had like a bit of a hard fork in the monetary reform community. In the UK movement, and this was pre-Bitcoin, there was a guy called Ben Dyson, and he was kind of we were all exposing how banks create money in the credit system, but we kind of hard forked on solutions. And way back in like the 2012-13 like debates, so in 2011 I went all in on Bitcoin, saying, right, fuck the system, we just need an exit. Because we were like presenting in Parliament. We were meeting like after the global financial crisis. There was like the Vickers lobby, like in the Vickers report, that was trying to come up with solutions. And you, when you were just speaking to bankers trying to help them like reform money and reform the banks, you just realize it's absolutely useless, because they don't want it reformed, they want it broken. So we kind of forked off, and we were given all these presentations. And Richard Werner was there at one of the Positive Money annual conferences. Ben Dyson was there, and I was there. And we did a Bitcoin debate. And the guy, Ben Dyson, who was big in the monetary reform community, he ended up like debating, like basically thinking Bitcoin was a Ponzi scheme and a scam. And then eventually, he carried on doing the monetary reform stuff, and then got a job at the Bank of England. Um, he got co-opted into the Bank of England and started launching the central bank digital currency project. And then I looked up on his LinkedIn the other day. He's now works for the Bank for International Settlements, doing the Mbridge central bank digital currency project. So in those monetary reform days, we literally, Richard Werner kind of forked off thinking it's a CIA op. I went full blown into the Bitcoin stuff, and then Ben Dyson ended up building the CBDC for the Bank for International Settlements, and he still works on that project today. And like those are the different forks you can end up, and now it's all coming full circle as we kind of enter into this battle between self-custody Bitcoin and stable coins and central bank digital currencies.
It seems like if I just had to pick, where he's coming from, he does seem like he's more interested in kind of becoming in the Economist Hall of Fame as to, I'm the guy who cracked this economic theory, and I publish these peer-reviewed journals. It's one thing when you kind of get it and you get it for academic fame, but it doesn't sound like he's sort of interested in personal enrichment and sort of I think to quote Michael Douglas in Wall Street, greed is good. I do think that as you get it and you realize that you make a lot of money personally on it, yeah, sure, it's not everything. You definitely want it. You definitely want it for not funding wars and all the rest. But I think he doesn't seem to have that bone in his body. Maybe I'm wrong.
Yeah, his theory is basically that you can, how like Joe Calasari always says, you need growth to outstrip interest rates.
Yep.
And so you can grow your way out of a debt-based Ponzi scheme. And what Joe misses in that is kind of Richard Werner's theory of the three forms of credit. And so if you're doing it for real estate, which obviously by definition, a bank, 40% of all dollars and pounds and euros created are for mortgages. And so that part is just complete wealth transfer. If you do it for consumption, then you end up with massive wealth inequality, which is all those that end up with debt but no assets. And that creates the kind of leads to the civil unrest type of environment or the K-shaped economy. But he believes you can do it as long as it goes into funding entrepreneurs and business. But obviously,
Which
banks
I
got
think,
out.
it sounds appealing, Simon, but the idea of regulating banks to force them to do that is just a terrible idea. Right?
Well, they won't, because the reason that banks got out of the business loans is because it's too risky. They wanted to have it collateralized by real estate. And so they stopped lending to businesses because they didn't want to take that risk. So it all went into the private equity and venture capital industry. And not many people. I mean, they maintain some industries like invoice financing for like corporates that companies that have good invoices, and you can kind of do a bit of debt financing for like the fish and chip or mom and pop's store with cash flow. But banks have got zero interest in funding productivity. They just want to fund speculation. They'd much rather create derivatives, have real estate where they can repossess and foreclose if the debt goes away and the real estate doesn't run away.
Right, which is kind of why kind of really the next 20 years is kind of going to be the end of the banks, I think. At the end of the day, we're going to sit there and we're going to witness Bitcoin go up 100x, and then once Bitcoin's at 10 million and sort of prices of goods have stabilized. Now Bitcoin the price of a cup of coffee will be more or less denominated in Bitcoin, not so much in dollars. At that point, people will start lending their Bitcoin to interesting projects, and they could lend it in pools, but we won't need this concept of banks kind of the way it is now. Do you agree with that?
Yeah, I mean, so where I think it's useful, this framework is kind of debunking the growth over interest myth that Joe Calasari likes to kind of push. And you can just say, well, all banks go into speculative, unproductive loans and asset price inflation. It doesn't go into the real economy. And so if it doesn't go into the real economy, then actually what you're promoting is propaganda from banks in order to pump your bags, because it only goes to pumping the price of assets, which creates the K-shaped economy, and it's the flaw in the whole thing, because it goes right back to the creation of central banking, which was a debt-based Ponzi scheme in order to fund wars and confiscate wealth from the people, introduce income
Well,
tax.
it seems, to use his argument, though, Simon, it seems that it eventually goes that way, right? So in the case of, his thing is, if you look at Germany and Japan, their economies were reduced to ashes, or after the Second World War, and it was initially used to rebuild the economies and to do very productive things. But eventually, the state is that we migrate to a state where banks are lending just to fuel asset growth, and that's what we're seeing in the UK with these, just kind of moronic building societies everywhere, right? So everything
Yeah.
in the UK is about building
Well,
society.
the
Yeah,
side
and
effect to it, though, and this is the bit that people miss, and this is the scam, is the side effect is that you become a vassal state, and UK and Europe are exact examples, because Japan became completely vassalized, and this is even reflected in the Japan carry trade. The Bank of Japan just became a tool of speculation for the Federal Reserve. And Germany right now has just become a tool of destruction for the private equity industry to accumulate all the cheap assets and asset strip the country. And so that's the side effect of this financialization and securitization model based upon a debt-based Ponzi scheme. You become a vassal state.
Dark, did you want to
And you
try to
become
jam a word in edgewise there? Guess not. I think he was trying to say something.
Go ahead, guys.
You there, Doc?
yeah, I'm sorry. I would just add that it's not just asset inflation, right? It's also consumer inflation. So consumer loans, credit cards, car loans, I guess one could argue, all of these consumer loans they just raise prices, right? They don't create GDP. And I think that's the point, right? It's only loans that go into productivity that increase GDP. And I think what his stat was 85% of all loans go either into assets or into consumer loans, right? And that's just, like, to counter Joe's argument, again, that only leads to one place, which is asset inflation and price
Asset
inflation.
inflation
But it
inevitably leads to price inflation, right? That's what happens, right? Your stock portfolio becomes more valuable. You borrow against it. You feel more rich. You increase your leverage. You buy more consumer goods. You buy a second house. Uh, there
Uh,
is no asset inflation without price inflation. It's just an intermediate state. It's like the water starts boiling and it becomes steam. Eventually, you're going to get price inflation.
and that's the Wall Street scam. The scam is, in order to beat the system, you have to leverage debt, and the banks get to create all the money and earn the interest on the debt. And then the average person says finance is too complicated. I can't just, until someone could say to them, you can just save your money. They said no. If you save your money, you've got a melting ice cube. So you have to speculate. And if you're a dentist, or your job is not speculation, then you're going to hand it over to Wall Street again, and Wall Street's going to charge a fee over managing all your assets. And then they've managed, to get in this position where BlackRock has board seats and voting rights over every single company that JP Morgan can persuade to go public. And then you have the Blackstone private equity model. And remember, his message is that the more banks there are, the more localized they are, the more specialist they are, the more decentralized they are, because he believes in the state banking model. Um, the more, the more productive it is. Whereas what are we moving to now is just peak centralization. And centralization means, how do you fund ginormous loans? Because you only deal with the big shit. And that's where you get the wars. And so you then manage your portfolio to create wars and destroy humanity.
That sounds like a great place to maybe take the wind out, go around the horn, and close this one down. Shout out to all the people traveling up to the Portland conference. I see some folks from my neck of the woods. What's up, Alan? Probably driving right now, listening in. Terrence was in an airplane a bit ago. Thank you to BTC Noah. He actually gave my kid a pretty cool present. Thanks a lot, buddy. AC, do you want to start us off with saying goodbyes for the day?
Yeah, amazing space today. Really loved all the conversation. One thing I was hoping we could touch on, but really I'll just kind of throw it out there. For folks
Tomorrow.
that followed the news, no, just real quick, Lauren. For people
Yeah,
who saw what
I'm
happened to Jimmy, is air gapped means air gapped. So your seedword should never ever touch an internet connected device. And if you happen to want to monitor it on a mobile device or a computer connected to the internet, that's what XPubs and what watch only wallets are. So I'll land it there. Great space, guys. Thanks.
Here, here. I second that one. Thomas, are you around? Are you marrying and doing other things, trying to run a city?
I was working and listening.
There you are.
I like forward to watching that Tucker video. I'm going to do that later today. Anyway, I'm very interested in hearing that. It's also not just the content of that video, but also, at some level, that's a step into mainstream. A lot of stuff we talk about. You step outside these spaces and interact with your friends and colleagues, and no one knows what the hell you're talking about. So when Tucker gets quite a few views on his stuff, so it's I'm going to be interested not just in the content, but what content is hitting that first step into mainstream.
For sure. Well, Thomas is working on that hairball. It's crazy, just the last part of the conversation here, talking about the expansion of the money supply, and just when you think of it, even when your bookie lends you money or any of that stuff does, and Fred touching on people with the false confidence that just because their house is worth $400,000 more and they think they have all this equity, if you're looking at things like Dark mentioned, like credit card debt, the stuff is really going up. And it's the false assumption that, I'm worth, an extra 400 grand than I was a couple of years ago. So all this stuff is quite crazy. And I agree totally. I like Simon's thrust of, oh, no man, anything but love one another. Simon, parting words for the guests today.
Yeah, I just want to say one more thing. I know some people are on that space. Sorry, Fred, when I lost my shit on your space. But one of the things that, in case people are interested, Tucker Carlson released another interview today with one of the accusations at me was, you don't know what's happening in Gaza unless you're on the ground. And I told them that there is a US funded operation called Gaza Humanitarian Foundation that is executing the Holocaust at the moment. And they got very upset by that. So I just want to say, if you're in the Tucker Carlson moment, he released a video today by somebody that was recruited into that mission. And he's now become a whistleblower and explained exactly what the operation is. And it is a Holocaust that's happening right now with a starvation campaign funded by the Gaza Humanitarian Foundation, which is a Swiss company funded with US taxpayer money and executed by the Israeli IDF soldiers that are massacring people as they starve them. So it's not a conspiracy theory. People that are involved in the operation are whistleblowing right now, and Tucker Carlson thought that it was important enough for Americans to understand what's happening. So 2 videos from Tucker, Richard Werner, and the Gaza Humanitarian Foundation scam.
Okay. I will kick it over to Darkside because I don't know how to respond to that. Darkside.
Yeah, that's
Yeah,
heavy.
exactly. I kind of
But
was. Yeah.
everybody should watch the video and educate themselves. I saw a little piece of it. I haven't watched it in its entirety yet. But definitely a credible participant and a U.S. military hero who's doing the whistleblowing. But yeah, again, back to the Richard Werner video. Please watch it. It is our Minsky moment. Retweet it. get it out there so that people can begin to learn for themselves just what the problem is. He does a job. Man, his ability to present this thing, in the thousands of hours now spent on Twitter, I couldn't even come close to presenting such a clear and concise explanation. So, yeah, thanks, guys. Amazing space
Yeah,
today.
what a good one.
Amazing
Loved
job,
it.
Lauren. Thank you, everybody.
Before I kick it over to Fred, just I was thinking about the whole names, and I'm not a fan of names, no matter who's calling anyone else names. I really think it's a net negative for spaces because really you're in my estimation, you lose a lot of intellectual credibility. And this whole doomer BS, I'm not a huge fan. It's like people are entitled to their opinions. Let them have their opinions. If they're more thinking things are going to crash down tomorrow, that's their opinion. I like to call a lot of what our friend Joe C calls doomers more realists. They're actually looking at reality and saying, hey, we're assessing the situation and these are the possible outcomes. So plan accordingly. Anyway, we'll kick it over to Fred. Fred.
Yeah, great. Good space. I listened for about half of it because part of the long interest rate on 1912 Soviet bonds. I mean, okay, but I don't think.
Fred,
just
I
don't
have
think
to admit, I was actually talking to my wife for a big part of that, so I actually was also
that's
lost.
not gonna result in a Bitcoin strategic reserve. But it's okay. We can list. I respect Puncher and his friends, so it was okay. But
Fred,
I definitely think other fish to fry.
Yeah,
but,
I'm just eager for any way we can fund this in a legal way, which is not out of the taxpayer dollar. So any plans? I'm a big fan of allowing this platform to pitch those. I hope some of these things can come to fruition, but I remain optimistic.
And just last thing is I may start a space in a little bit about I just want to narrowly focus on this Richard Werner thing.
Yeah,
So if
for sure. And sorry we got sidetracked because Puncher was leading us to that other direction there. So sorry about that. We got Grant. Grant, are you in a place to say hello, goodbye? Because we're in the process of wrapping this one up. I know often you don't have a ton of time and you jump in at the last minute or something. I don't know if you're available to say hi, bye, or not. Give them a couple minutes, seconds, that is, and going once, going twice. No, I really think we do better as a community when we are able to voice our opinions in a coherent manner and hold our tempers, not name call, etc. I get a lot of value from hearing the opposite ends of each argument, and oftentimes I fall in the middle. So I really think that these are valuable, regardless of what you hear other folks saying about, demeaning spaces and whatnot. And, this guy's a so-and-so and try to label them, name them, etc. I really get a lot of value from everything most of the speakers have to say. I guess emphasis on most. So, but once again, I think I just want to conclude with get off zero. Even if you have a small allocation, even if you think Bitcoin might not make it, if you're thinking, hey, there's a 1% chance that Bitcoin's going to make it, then buy yourself a 1% insurance policy. Next, hold your own keys. Even if you're not able to hold 100% of your Bitcoin in cold storage, once again, start with a small percentage. Start with 5%. If you need help, contact anybody here. We'll gladly help you, walk you through all that. We do it all the time. Be kind to one another, forgive one another, and lastly, love one another. That's what this whole thing is all about. Sovereignty and love. With that, have a good one, guys.
The arbitrage on this trend has been margin called.
Think it was a hook, trust your islands, now they got it shook. Believe in the crooks, hell of the same. While they cooking the book, save up a decade, now I send a day. Another new and just get in the way. Bigger the bag, bigger when it all blows off. It is you who will pay.
Behind the ass, inside the success. Pull back the curtains and what do you get? And it's the risk with a bitch if you net.